a weakening of an extremely strong bull market. We've seen a boom market that came from massive stimulus, more stimulus than we've ever seen in the history of our country, and that's coming off, and that's natural and normal. And we're seeing inflation that was really, really high come down a pace, not 2%, but 2.5%. That's good. A pace is good. Slowing, no recession. That's what we want to say.
Let's talk about the other data point of this week that potentially could be somewhat market moving, and that is NVIDIA earnings. You talk about how there is this redistribution in leadership and this sort of push towards small caps and the equal weight, which is at a record high. How much could you get a sort of decisive earnings report from NVIDIA that could shake that balance, or have you changed either back to an overweight in some of the big tech cap numbers, or do you look at just this sort of broadening out as holding regardless?
So the broadening out is a very good thing. NVIDIA is a market-moving event when they tell us what their earnings number is. The top 10 names have never been such a large percentage of the entire market cap of this S&P, nor have they been so large a percentage of the earnings of this S&P. I would say that, you know, if indeed they were to miss whisper numbers, for example, the stock could go down. That could potentially be a buying opportunity, and I'm not an analyst for that stock. But it is a very, very strong space, this entire AI space. It's not going to stop or slow down anytime soon. And these stocks, if they are rather expensive, are nowhere near as expensive as the stocks were at the time that the bubble burst back in 2000. So again, if you should see some disappointment there, and it would pull down the S&P, it would be because of the largest names. And this would not negate a slowing but still growing economy and a broadening of the stocks.
Linda, is that the best way of valuing some of these stocks, to benchmark to one of the most extreme periods of valuation in the history of this equity market? What is the best way of benchmarking some of the valuations of these names right now?
Well, I'm just using that example to compare because it's such an important name. It's unusual that one name or 10 names or 7 names or whatever are such a big piece of the market. But these companies are, you know, large cap growth companies, technology companies. That's an exciting time, is when there's a vast movement in tech, a revolution in tech, if you will. Yeah. And then we all gravitate toward those names and the promise of those names. The trouble that we always get into in one of these situations is we extrapolate extremely high growth rates for too long. And you can only grow so high, so long, and then you slow down your growth rate, and then you slow down your multiple. Slowing down is okay. If I remember, I'm not comparing exactly to that time. I'm just saying that I was alive back then. I was in the market back then, and the market crashed for names in that tech space, not because of anything they were doing wrong or even their valuation. It was a slowing of an economy that was probably heading into a recession, which we don't see.
We appreciate your experience as well, Linda, and your take today. Thank you. Linda Dussel there at Federated Hermes on NVIDIA just at the end. We will speak to an analyst a little bit later, Pierre Ferragu of New Street Research, joining us in about an hour from now. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hackers.
Hi, John. Tensions escalating in the Middle East as Israel and Hezbollah exchanged fire over the weekend. More than 100 Israeli warplanes hit missile launchers in southern Lebanon Sunday morning. Hezbollah responded with a rocket and drone attack that killed one Israeli soldier with fallen debris. Israeli officials claim the strike prevented a massive assault planned by the Iran-backed militant group, and Israel has declared a 48-hour state of emergency. Meanwhile, Italian authorities say the victims aboard Mike Lynch's yacht were likely asleep or tried to escape as it sunk off the coast of Sicily last week. Prosecutors are beginning a probe for charges of manslaughter and negligent shipwreck. The chief Sicilian prosecutor saying there are currently no suspects. The probe is being conducted against, quote, persons unknown. Survivors of the wreck, including the captain and crew, weren't immediately tested for drugs or alcohol as authorities focused on first aid. And Apple is planning to unveil its latest product lineup on September 10th, including new iPhones, watches, and AirPods. Sources telling Bloomberg that Apple is only making preparations for that day, with concrete plans still under wraps. It's a critical launch for Apple, which has seen sluggish iPhone and wearable sales in recent quarters, and the pressure to keep up with AI advancements is only increasing. If the launch happens September 10th, the latest phones will go on sale September 20th. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for that. Up next on the program, the sprint to November.
Harris, I think, is about 60% likely to become president. I think the momentum, the aspirationalness of the thing, I think that really kind of carries her.
That conversation up next, live from New York City this morning. Good morning.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
Well, I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
And you see Trump on the defensive, not really able to land a lot of punches.
So here's the latest. Vice President Kamala Harris back on the campaign trail this week as her campaign rakes in over $500 million post-DNC. And Donald Trump is maintaining a heavy presence in swing states after a week of counter-programming the convention. Henrietta Trays of Vader Partners saying the following. Post-Labor Day, she could be in the lead nationally and in critical swing states by enough of a margin to emerge as the favorite to win the election. Harris has ushered in dramatic shifts in the electoral landscape, but is not yet favored to win the election, in our opinion. Henrietta joins us now for more. Henrietta, thanks for being with us. I want to start with those numbers. Harris' campaign and affiliates have raised $540 billion since Biden quit. How does that stack up against campaign Trump, and how are they spending it?
Well, it doesn't compare to the Trump campaign at all. The Trump campaign is down into something in the range of about $63 million for the entire month of July versus over $240 million for the Harris campaign. The two are not equal. If you're looking at the fundraising numbers, the DNC versus the RNC, voter galvanization, the number of volunteers they've gotten in swing states, it's almost double the size, if not more, in the Harris camp. And I think that's something that the Trump campaign is actively worried about right now. You saw it from their internal polling memos this weekend. They're anticipating that not just has Kamala risen 6 points since she started the race just a few weeks ago, but she's going to increase another 2 to 3 points in the next couple of weeks, the next couple of days after the DNC. That's a natural bounce, but one that would supersede Trump, and it probably won't fade. When you think about what Trump is doing on the trail, he's not going to campaign until Thursday. And Friday, he'll be in Pennsylvania. I mean, every single day is critical here, particularly when you're behind like the Trump campaign is now.
Just to go a little bit deeper into these numbers, the 540 million, if I said billion, excuse me, 540 million. 1/3, yes, a heck of a lot more money. 1/3 contributed in convention. First-time donors, since the convention, were first-time donors. 2/3 were women. It's the gender split here, Henrietta, that's interesting. That gender split, how firmly entrenched do you think that actually is? The split between women and men in this country and who they're supporting?
It is extremely firm, and I don't say that because it's just in the national data. It's in every single swing state as well, often by 10, 11, 12 points. It's particularly noticeable amongst young male voters and every other female demographic, and it's even more pronounced between young male voters and every other age demographic of older male voters. So there is this extreme gender divide that is expanding and becoming more obvious as the race wears on. What the Harris campaign is going to do to dig into those numbers a little bit further with their super PACs like Future Forward is they're going to spend $370 million on ad campaigns between now and November 5th. So get ready to hear a lot about Kamala Harris and her campaign.
How much is the gender divide really hinged to the issue of abortion? And how much can Trump really counter that by coming out with things like what he did over the weekend, talking about how he believes that states should decide for themselves, that there shouldn't be a federal abortion law, but that each state can make their own decisions?
You know, I think that the state decision piece is really problematic because you have these state decisions being made at the ballot in November. In Florida, for example, where I think 2/3 of abortions in the South are conducted, there is a ban now at 6 weeks, and they need to vote on that to maintain it in November. Whether it's Louisiana, Arizona, Nevada, I mean, these issues are on every single ballot. So the last thing you want is a repeat of 2022, which was a real problem for the Republican Party at the Senate and in the House. And that's what they're headed towards in 2024. And the messaging from the Trump campaign with J.D. Vance and Donald Trump trying to come out as, you know, pro-IVF, but really saying some fundamentally problematic things about family planning, to put it nicely, is something that is alienating, I think, a lot of voters. And it's not just women, it's voters across the spectrum. Abortion is the number 3 issue that voters care about after inflation and immigration right now. And immigration and abortion are pretty neck and neck.
In the meantime, your first point, inflation, is something that we've not heard that much about. We heard, of course, the price gouging type of discussion from Kamala Harris, although we've seen some of her people walk it back and talk about how she's not actually going to get it passed and that it actually isn't, you know, an effort to take money away from grocery stores and things of that nature. I'm just wondering, how much are you getting a sense that the criticism of Kamala Harris, that she isn't coming out with real policy, how much is that landing?
I think that it's landing amongst sort of the media groups, but amongst the general electorate, you don't see any of that translating to either her polls, her fundraising. I mean, they made $86 million just last week alone. So the issue is not that she is not getting out in front of journalists and the press. That's an issue for the Trump campaign. But the American voter that's now newly galvanized, you know, Democrats are 83% enthusiastic about this election versus 71% of Republicans. It's not resonating with the average voter. And I think the real problem for Trump is that she doesn't need to get specific on policy. You know, we don't really need to have a robust discussion about where do you think carried interest tax rates should be or capital gains tax rates? What kind of revenue are you trying to bring in to offset the cost of the child tax credit? We don't need any of that. We just need this sort of forward campaign versus do you want to go back to the Trump administration of the 4 years that he was in office? And that's really what the campaign is about. And I don't see that changing over the next 71 days.
Can we talk about policy? Forgive me, but We want to talk about policy, so hopefully we can do that. This news came out from Canada, from our team just moments ago, according to people familiar with the matter. Canada would impose new tariffs on Chinese-made electric vehicles, aluminum and steel, lining up behind what we've heard from the United States already previously. The government plans to announce a 100% levy on electric vehicles, 25% on steel and aluminum. Canada agrees with the United States. This seems to be where the world is when it comes to tariffs and China. How much daylight is there between Trump and Harris on this very key issue for a lot of voters?
Well, I mean, let's be mindful that the Biden administration just a couple weeks ago, or months ago, put in the 100% electric vehicles tariff, the 3 times higher steel and aluminum tariffs, or steel tariffs. There is no question that the Trump administration started with tariffs, and the tariffs under Biden are higher and more exhaustive now than they were under Donald Trump. The USTR, the Department of Commerce, all the investment restrictions, export control restrictions are only growing. I don't see any scenario where any of these tariffs come off once they get put on. Think about what you'd have to see in order to take the tariffs off. You'd have to see China capitulate, China prove, and then sustain that they had made changes on forced tech transfer, climate change, human rights, state subsidization. None of that is occurring.
Henrietta, thank you. Henrietta Trays, their Vader partner, squeezing in some policy at the end. The Harris campaign are calling tariffs a Trump tax. Yet you heard Henrietta just then. Those taxes have gone up under this administration in many places.
We're not going to get a discussion, though, deciphering good tariffs from bad tariffs and what exactly the tariff policy is going to be. But
you wish we
it's
would.
One that we could be having because it's a valid one, especially in light of the fact it's what's happening.
Up next on the program, another setback for Boeing in space.
Morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Stocks on the S&P coming off the back of 2 weeks of gains on the S&P 500, adding just a little bit of weight to the recent rally, up 0.1%, but some clear outperformance again on the small caps. We saw this on Friday, just a really strong day of gains, week of gains, up by more than 3.5%. It continues this Monday morning, Lisa. The Russell up by 0.8.
Just to sort of put that into perspective, on Friday we saw a new record high for the equal weight S&P 500, even though just the market cap weighted S&P still is away from its all-time high. How much of this is sustainable, though, if we get a true weakening in the data? And this is something that Linda Dussel didn't even go to, because she said, frankly, we're seeing a weakening from a very strong pace, but we're not going to get that. We're not seeing any indication of that, which is the reason why people are so willing to embrace a soft landing where rate cuts will really help some of the more leveraged companies.
After what the Fed chair said on Friday, is bad news still bad news? Given how sensitive he is to it?
It's a great question.
Left out the word gradual?
A lot of people think that that's not the case. I mean, at a certain point, you have to wonder if there is a lag effect to how quickly some of the rate cuts could affect the overall economy and boost it. Ostensibly, based on history, bad news will still be bad news at some point.
Think how this market and market participants responded to August 2nd and the payrolls report for the month of July. So that's absent the speech we heard on Friday. And there were guests out there talking about emergency rate cuts and talking up the potential of going 50 and not 25. Could that change even more if we get a really weak print on September 6th? Like, what's the next leg? You know how markets work. They're always pushing for the next chapter. What's the next page of that story?
Do we go back to zero?
Right, 75.
Negative rates?
Right.
Yeah, exactly. Look, it's a legitimate question. At a certain point, this really goes back to, have we really eradicated inflation as one of the potential risks out there? If that is the case, then, you know, the floor is the limit and you could keep cutting. If we still do have some inflationary pressure, that calculus becomes a whole lot more complicated.
Even after Friday, in fact, I think because of Friday, there is a view that this chairman is still highly, highly data point dependent. And you have to remember that when we started to go, what was it, 50 to 75 in the rate hiking cycle, it was off the back of UMich consumer sentiment and the inflation expectations embodied in that, which led to a leak in a certain newspaper and a much larger hike than we anticipated.
All right, if you take a step back, it's clear that their bias is to cut, and they're looking for an excuse to cut rates significantly. And that, I think, is what you're saying about the data point, right? Is there a data point that gives them a reason, an excuse to cut more significantly? I do go back to what Loretta Master as well as Patrick Harker had to say, that they expect a 25 basis point rate cut followed by a 50 or even more of a rate cut later on. They pointed to the initial rate hike, and they said it was initially smaller, and then came the 50 and the 75 and the bigger ones. They don't want the market getting ahead of itself, but that's not to say that they're not on board with some pretty significant rate cuts, even just to match the restrictiveness necessary for inflation that has come down.
I'm just stirring up the pot, just seeing how things go for the next few weeks. Not necessarily my view, that's for sure. Let's switch up the board and get to the bond market. A 2-year, 391.25, a move of more than 10 basis points lower last week, the bulk of that in Friday's session. We're down to about 380 on a 10-year maturity, on a 30-year, up about a single basis point, 4.1%. Lisa, you mentioned this in the program on Friday in our special programming. You mentioned it again this morning. Not exactly walking away from the Powell speech with a decent impression of the destination. We're still obsessed over the speed of the journey, and the journey that we're going to begin potentially on September 18th.
This was supposed to be the time where they talked about a neutral rate, where they gave you a sense of the destination, and they avoided it with everything that they could, all of the Fed officials who we spoke to. To me, I'm looking out and I'm seeing maybe like a 3% or a 2.5% destination. They don't really agree on any particular point, but this raises the question, are they okay with a higher inflation rate? Are they looking at a more inflationary economy? They don't know. All they know is that there is weakness coming down the pike and that they're going to get ahead of it. And that's the reason why people are getting enthusiastic without necessarily understanding some of these bigger questions that plagued the market for quite a while.
The closest the Fed chair's come to saying mission accomplished without saying mission accomplished. Did it feel like that Friday? You were there.
A bit. started talking about history, his place in history, the path that they had. It was a very sort of grandiose speech in that way. I will just say we do have $69 billion of two-year notes being auctioned tomorrow and $44 billion of seven-year notes auctioned on Thursday. I am curious to see if these are really, truly non-events, if you have plenty of bids, or if you start to have some pressure over the long end. What does this mean for longer-term inflation rates? And that, I think, is going to come more into the fore, particularly with the political schedule.
Just squeezing in a little bit of bond supply. Welcome back, Bramo. Let's turn to the third board. I want to talk about foreign exchange. Two currency pairs, two stories. In the FX market, euro-dollar 111.64. That euro weaker by 1/4%. German business confidence weak. The EFO president saying the German economy is increasingly falling into crisis. 111.64. And I would say a structural crisis. That's the issue here, Lisa.
A Bloomberg terminal user messaged us, and I think this is actually fantastic framing. The German economy simplistically is a car company. They are in a bad place with the electric vehicle evolution, hence growth will be anemic for some time. How much is their economy completely leveraged to the auto sector that is facing the headwinds of both the electric vehicle transition and the complications there, as well as pressure with China and the introduction of a lot of EV vehicles coming from that country at a time where there's increasing fissure between the West and the East?
Bad policy, potentially. We can have that conversation another time with some real depth, but economic issues of their own doing. I mentioned two currency pairs. That's the euro. Just want to finish on dollar yen. Just purely an observation here. The good news for many of you, dollar yen's been moving like this now for a period of time. Yen strength. And the correlation between yen strength and risk appetite is totally broken down. And I think for many people, US-based investors who don't want to spend their mornings and their nights waking up and checking a currency pair and seeing how dollar yen is doing, this is probably welcome news.
That's what we heard from Peter Scheer. Basically, we've seen a complete annihilation of fears around the boogeyman of the yen carry trade. That said, let's see. Let's see if things get disruptive in a more significant way. But yes, maybe we overstated just how disruptive that was at a time when people were looking for excuses to trade, and there were also leveraged funds that were having some hiccups.
Dollar yen, 144 in the FX market. Under surveillance this morning, let's check out crude. Oil rising as Middle East tensions ramp up. Israel taking out thousands of Hezbollah missile launchers yesterday in what it called a preemptive strike. Israeli officials saying Hezbollah responded by firing more than 200 projectiles that caused limited damage. That move you're seeing in crude, though, the tension's only one part of the story. Brent crude's up by 2.8%. The move today, Lisa, earlier on, around the latest out of Libya.
Yeah, Libya actually preventing exports as well as production in the eastern region as they face some sort of takeover attempt of the central bank governor, in particular, the central bank governor exerting this halt on exports as well as production. It highlights how much uncertainty there is. I will also note one other story that came out overnight that also kind of colored the pricing of oil, and that is that Russia attacked Ukraine's energy supplies in a very significant way. So when we start looking at the response in the oil markets and attributing it to the Middle East, just a word of caution. There are a whole host of other issues that are coming to the fore that are also creating some pressures there.
Oil up by almost 3%. I want to turn to the latest on the politics. If you missed this earlier, we mentioned some numbers around the Harris campaign and the fundraising. More than $500 million. Massive numbers. The total fundraising haul reaching $540 million since President Biden announced he'd step aside, with $82 million rolling in during the DNC just last week. Some of the recent inflows, the breakdown, we mentioned this too with Henrietta Trace just moments ago. 1/3 of those contributions were first-time donors. 2/3 were women. And the donations that we're seeing, largely a reflection of where the support is and where it's coming from in this country.
Although interesting, when you actually listen to her speech, she wasn't talking about breaking the glass ceiling and focusing on the fact that she would be the first female president. So it's sort of an interesting dynamic, a question of what's behind that. Is this the abortion policy? Is it something else? But you have seen this divide between men and women growing in the United States in a very dramatic way. And there have been a whole host of studies on that. I do wonder how long we can have a vibe kind of campaign rather than any kind of real policy. And according to Henrietta Trace, that is what we're going to be dealing with for the rest of the time.
Don't you think the media needs to do a better job here to really start putting some pressure on getting some sit-down conversations, some interviews?
I feel like people have been trying to, but we just heard Henrietta Trace saying it's a problem for the media, but it's not a problem for the voters. People don't seem to care. This is something that Republicans are leaning into. They're trying to accuse Kamala Harris's campaign of not coming out with any specifics. Whether it lands remains to be seen. I don't know that we've really gotten specifics from anyone that can actually be passed. Question then is, how much of a black box is anyone who comes into office if we don't really take seriously any of the proposals they put out there? It becomes a real issue.
You say they've been trying. I'll pick out an example, and I won't name the organization by name. We're classy here. There was a magazine that came out recently with a massive cover story, a very favourable cover story, and they weren't granted an interview with the Vice President. Should you be going forward with that cover story and a very favourable story about the Vice President without a sit-down conversation? I don't think so. I don't think so.
We can discuss some of the coverage, et cetera. At this point, we are getting very close to voting. And I think that that's the point that Terry Haynes could say, which is essentially next week, you'll start to get early voting in this country. So at a certain point, this is what you are getting. What you see is what you get in terms of a campaign that's already set to go into actual votes.
That's the latest on the politics. Let's turn to Boeing. Boeing facing a new setback to its space ambitions. NASA announcing over the weekend that it will not use Boeing's faulty Starliner craft to send home astronauts stuck at the International Space Station. The agency deciding it's safer to use Elon Musk's SpaceX. Boeing's down by almost 1%. Guy Johnson joins us for more out of London. Guy, how much of a setback is this? How embarrassing is this for Boeing?
It's hugely embarrassing. Of course, it's hugely embarrassing. They sent 2 astronauts up. They were meant to be up there for a week. They've been up there a couple of months, and now they're going to be up there until the beginning of next year. You've got to reconfigure a whole load of capsules, both on the SpaceX side and also on the Boeing side. They're going to bring the capsule that went up back uncrewed because they can't run the risk of bringing the 2 astronauts back in it. It's got thruster issues, and they're concerned about what the re-entry would ultimately look like. This is a program, John, that is already billions over budget, and it's behind schedule. It's been like this for quite some time. Boeing is saying that it is committed to the program, but remember, you've got a new CEO coming in. He's got a blank piece of paper, and he's looking at everything right now. So yeah, it's hugely embarrassing. It's also potentially financially very consequential. There is a lot already invested in this program. What happens to it next will matter to Boeing shareholders.
You alluded to it, Guy. Build on that just a little bit. How blank is that piece of paper? Does the incoming CEO really have the option of stepping away from that business?
I think everything is on the table. Look, you have to figure out how you're going to right the ship. Let's say it is still a priority. Kind of how high is it in terms of the list of things that need to get done? How big a priority is it? Does he need to make sure that the civil side of the business is fixed first? Can he do it all? Is there enough bandwidth to actually solve all the problems simultaneously? There are lots of things going on at Boeing at the moment. The civil business definitely needs to be put back on an even keel. The MAX program, what happens with the MAX replacements is the next big challenge there. What is happening with the 87? What's happening with the 777X? There are lots and lots of challenges that need to be resolved for this company. You come back to the space program, yeah, sure, it's going to be an issue and it's going to be something that this company has to resolve, but when does that ultimately happen? And do you have the luxury of time when SpaceX is doing what it's doing right now? Remember that it's got another launch going up. It's about to have another launch going up. It's going to be sending astronauts up. They're going to spend time in one of the highest orbits that we've ever seen. It is making progress. The problem here is you've got a competitor that is doing it better and faster. Do you stick with the program and continue to make losses? It's a really big challenge. Boeing has limited resources. It's got to figure out where it wants to spend them.
I would turn it on its head, Guy. Why should they continue with a program that has left them with losses where they're falling behind?
Because of so much that has been invested already, Lisa, and because this is going to be an area of growth going forward. Can Boeing afford not to be in space? I think is a key question that this company needs to answer. And I think that is going to be the challenge. It's really difficult to answer it at the moment. At some point, this business is going to be profitable. How much you need to put into it, how many resources, human resources, financial resources need to go into it to get to that point remains a really difficult question. This is unbelievably complex stuff that you're dealing with here. We all know that. And as a result of which, it's just a resource issue. But can you afford not to be in this? Ultimately, if further down the road, this turns out to be a hugely profitable part of your business. It's a really difficult question. And there's so many unknowns here. Kelly Ortberg's got some really difficult challenges and questions that he's got to answer. We don't know yet. At the moment, he says he's committed, but this company is falling behind SpaceX in a very big way at the moment.
Huge win for Elon Musk. Guy, thank you, sir. Guy Johnson there with the latest out of London. Equity futures just rolling over just a touch, still positive by almost 0.1% with an update on stories elsewhere this morning. With your Bloomberg brief, here's Yahara Hakas.
Hi, John. Ukrainian President Vladimir Zelensky says Kyiv's incursion into Russia is part of an effort to make Moscow accept, quote, fair peace. Ukrainian forces are claiming they control over 1,200 square kilometers of territory amid Ukraine's first foreign military offensive inside Russia since World War II. Russia's defense ministry says its troops continue to repel Kyiv's efforts in several regions in the Kursk region. Meanwhile, Canada is imposing new tariffs on China targeting electric vehicles, aluminum, and steel. That's according to people familiar with the matter. Canada will impose a 100% levy on EVs and 25% on steel and aluminum. Prime Minister Justin Trudeau is expected to unveil the policy in Nova Scotia, where he's gathered with his cabinet for a series of meetings about the economy and foreign relations. And Lando Norris won the Dutch Grand Prix, closing the gap on Max Verstappen in the Formula One driver standings. Verstappen finished runner-up and still holds a 70-point advantage in the championship with 9 races remaining. But Norris has closed the gap in recent days and told reporters after the race that McLaren now has the best car in the sport. The next race is at Monza this weekend. That's your Bloomberg Brief. John?
The best weekend. Yahara, thank you. Up next, Powell's dovish pivot.
Basically, with this speech and certainly with the July meeting as well, they've been heavily signaling that they're going to make this move in September and subsequent moves. So that's already been priced in the market.
That's up next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The important stuff, this close to Oasis getting back together. Liam and Noel settling their differences and
Really?
touring next summer.
Okay, you're going to go, aren't you? You're going to like follow
It's
them
like
around.
the one thing that I would go to. I wouldn't follow them around. I'm not that dedicated.
You're not an Oasis groupie?
I'd go to one event next summer if it happens.
Yeah, well, you know, they were very underrated. A lot of people thought that they were, you know, kind of lost in their time in terms
Oh, really?
of how good they were.
Is
Yeah,
that
yeah.
like an American perspective on the band?
Well, like music theorists believe that they were actually highly sophisticated and broke ground in ways that they were not appreciated for.
This is like a big deal for millennials. Like mid-90s.
Let's move on.
Big deal. Liam Gallagher's like teasing people out on Twitter, just saying 27th of August there's going to be some kind of an announcement at 8 a.m. So we'll see what we wake up to if this happens. These two brothers can't stand each other, can they? Have they like settled their differences now? They're best friends again?
I don't know.
We'll see how long it lasts.
We'll get a historic scholar on.
Okay.
We'll do wall to wall.
We'll see how long it lasts.
Wonderwall.
Equity futures right now in the S&P, positive by 0.03%. That was our early bid for tickets. In the bond market, yields up by about a basis point. The 10-year 381. Under surveillance this morning. Powell's dovish pivot.
Basically, with this speech and certainly with the July meeting as well, they've been heavily signaling that they're going to make this move in September and subsequent moves. So that's already been priced in the market. I just think right now they just probably don't need to go 50 basis points. I think that would, trigger expectations about a really rapid pace of rate decline.
So here's the latest. Traders are awaiting the first round of data since Fed Chair Jay Powell confirmed rate cuts are coming, with jobless claims on Thursday and PCE on Friday. The debate turning to the size of the first rate cut and the future path of easing. The former Fed Governor, Betsy Duke, writing the following: it would take something extraordinary to derail a 25 basis point cut in September. The question we've all got, what it would take to make it 50. Betsy joins us now for more. Betsy, wonderful to see you once again. Let's start with Friday and that speech on Friday. Lisa and I have got a similar question, and I think you might have the answer. Was the chairman speaking for the committee on Friday or speaking for himself?
So for the entire speech, he was speaking for the committee, except for the one line when he said, "My confidence has grown that inflation is on a sustainable path." And there he said "my," and that's very unusual for this chairman. And I think what he was doing there was he was expressing his own opinion, but giving the committee room, not front-running the committee, but giving the committee room in September through the SEP to all put out their own estimates of both where the various indicators are going to be and their confidence in their forecasts.
Betsy, how big do you think the range will be in the summary of economic projections come September 18th? How wide is that range going to be?
The range of the projections themselves or the confidence? So the projections themselves, I don't think are going to be a terribly wide range or not more than usual wide range. But what I'm really watching for is the confidence, and particularly the confidence in the inflation forecast. So in the June projections, there were just one or two participants who had more than actual normal confidence in their projections. All the rest of them said more uncertainty than usual. So that's the confidence piece that I'll be looking for.
Betsy, do you think that it's appropriate for this Federal Reserve to be so disproportionately weighted to cutting rates at a time where we're not seeing true weakness in a labor market?
Well, cutting rates is right now only reducing the amount of tightness. It's not in any way becoming stimulative. And so I think it is appropriate to begin that, but I think they'll go fairly slowly and feel their way along. The one piece that I don't think there's consensus on is what is the level of neutral? What is the neutral level of interest rates, those that are neither stimulative nor restrictive? And I think they'll be feeling their way along to that point.
They also didn't really resolve the other issue, which was the theme of the whole conference, which was how much was monetary policy responsible for bringing down inflation and how much could it be responsible for preventing some sort of downside to the labor market in general. I mean, did we get any answers to some of the bigger questions other than simply a Fed chair who came out and said, yes, we're going to cut rates, we're going to start the process, and we could potentially cut a lot?
So actually, I think he did address that question. The piece that he talked about is the importance of inflation expectations. And what I heard him say was, yes, we were wrong on transitory. Once we realized we were wrong, we acted. And so what I heard from that is, so the Fed might get the individual settings wrong from time to time, but its commitment to its mandate and willingness to act in furtherance of that mandate is most important for the confidence and anchoring inflation expectations. And that piece, I think he declared victory on, not necessarily inflation, but inflation expectations remaining anchored through this cycle of inflation.
Can we deal with inflation, their contribution to actually bringing inflation down from 8 down towards 3? Betsy, what's your impression of things? Because in that speech on Friday, I think we certainly walked away with this idea that the Federal Reserve Chair was acknowledging that a lot of the work came from elsewhere.
Well, this was a supply side driven inflation anyway. So all of the work was on the supply side, which the Fed can't really affect. All the Fed could do was hold demand in check as best it could while supply caught up. And that's true for the labor market as well as the goods market. And I think they did that. But I heard in his speech, he recognized that the reduction in inflation has come entirely from supply, including on the labor side. So when you look at labor, I don't think we have a weak labor market. It's coming into balance, but it's coming into balance because of improvements in participation and increases in immigration. both of which have a limit to how much they can continue to contribute.
Betsy Duke, appreciate it. Thank you. Former Fed Governor Betsy Duke there on the latest, and the reaction there to that speech begs the question, further improvements on inflation from here? Does it require the pain that the Federal Reserve Chairman was talking about 2 years ago? And is he willing to allow that pain to actually emerge based on what we just heard on Friday?
Well, based on what he said Friday, no, he's not. He is not worried about the labor market that's too robust. Quite the opposite. He's worried about further deterioration, that would not be welcome. What she just said there was fascinating. Declaring victory on inflation expectations, not necessarily inflation, but that their role in bringing down inflation expectations was creating the price stability that they're heading out for. This explains why the University of Michigan survey takes on renewed importance. If this is truly their metric, they're looking at what the 500 people who are surveyed for the University of Michigan survey, believe that inflation over the next 1, 3, and 10 years is actually going to might be the most important kind of information for them to look at.
Are you looking forward to leaving behind this period of monetary policy?
Well, I'm looking forward to the history books being written about it so that we can more fully understand it, because right now I would say the chapter is not over.
It's almost as tedious as that long period of zero interest rates. The obsession over, like, you Mitch.
Okay, but what this highlights to me is how little we really understand so much of this. We don't understand whether we're in a new inflationary regime. We don't have agreement on what the new neutral rate is. We don't understand what the excess is that were built up over the zero rate policies, whether they have to be unwound in any kind of disorderly fashion given the refinancing wave. There's so many questions left over from the zero interest rate period of time. There are a lot of things that are going to be very interesting that'll be written, but that just sort of feel like morass right now.
If you really want to liven things up, stir the pot, so to speak, read Adam Posen's piece in the Financial Times going into the weekend. He thinks the Fed should prepare the market and this economy for the pivot to the pivot, that the chairman should reiterate the stagflationary effects of mass deportation and point out the vast majority of tariffs are paid for by US purchasers and therefore will stoke inflation, rather than simply hoping the factors that would drive a reversal in policy will not arise. The Fed needs to start laying the groundwork for a possible pivot now. Adam Posen, this is controversial, I know, not everyone will agree with this, but Adam believes that if Trump wins the election and does the things that he's saying, the Fed's going to be hiking next year.
The Fed's channeling Shogun. Today is today, yesterday is yesterday, tomorrow is tomorrow.
I've been watching Shogun.
It's so good.
Isn't it the best?
It's really a fantastic show.
I won't ruin it for you, because I know you're sort of like mid-season, but fantastic. Third hour of Bloomberg Surveillance up next. Liz Ann Sellers of Charles Schwab, Pierre Ferragu of New Street, Matt Lozzetti of Deutsche Bank, Mike Collins of PGIM.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. The top names times and global leadership are on Bloomberg.
We are 40 millions. We're a big country, and we really depend on the aid from the world. And we depend on the aid and the position and the stance of the US. So I would like to understand, what would it mean to finish war fast? If Trump knows how to end this war, he should tell us today. Because if there are risks to Ukraine's independence, if there are risks that we will lose the statehood, we want to be prepared for this. We want to understand whether in November we will have the powerful support of the US or we'll be all alone. Only our lives are at stake here, and nobody can just trade our lives.
Nobody covers the top global leaders like Bloomberg Television and Radio. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
The time has come for policy to adjust.
We're more vulnerable to another negative data point on the labor market.
There's no question that growth is slowing, the labor market's slowing.
People have moved violently in terms of the narrative of the economy, in terms of what the Fed should do.
They really need to get a move on.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Data point for this market, and now it's payrolls data on September 6th. In our survey, and the estimates will keep coming in, and this median estimate will move around, but the median estimate right now, 160. I think this market would take a 160 and run with it.
You know, one thing that we really haven't explored is it seems like the Fed is seeing signs of weakening that have them very concerned. Austin Goolsbee talking about that in a more sort of dramatic way than some of the other Fed officials. And yet people come on the show say that they don't see it. We're not hearing that in the commentary from companies, even retailers who are saying that actually they are seeing ongoing retail spending and they're keeping people employed. So which is it? What is it that the Fed is seeing that other people in the market are not? And that, to me, I think is something, a delta that we have to explore, because that is what's been supporting equity rallies at a time when the Fed is talking about weakness that they need to get ahead of.
When you say the Fed, you're talking about Chairman Powell or other members of the committee. We had this conversation in the last hour. When the chairman spoke on Friday, was he speaking for himself or was he speaking for the committee? Betsy Dew, former Fed governor, was on the program just moments ago, and she said almost for the entirety of that speech, he's speaking for the committee until he talked about confidence levels around inflation, and he talked about my confidence around inflation. How much space will there be for debate come September 18th?
It seems like they've dodged the discussion around what the neutral rate is and how much inflation is going to come down. I will just put this out there, that no Fed official has dissented at a policy meeting since June of 2022. That matches the longest streak of consensus types of reads going back to the period between 2003 and 2005. Do we start to see fissures in that, given the fact that we do have dissent? At what point do we get to that level, given the fact that at this point, sure, a lot of people could agree, yes, you should bring down interest rates just based on how much inflation has come down?
Some healthy dissent. You'd welcome that, wouldn't you? I'd welcome that too.
We're starting to hear it around the margins, but what's the point of getting consensus if there truly is a difference in opinion? Healthy debate is healthy.
We'll take some healthy debate. Some healthy dissent. Your equity market on the S&P 500 positive by 0.1%. A little bit of a lift here. In the bond market, yields high by not even a basis point. 380.84. There's a rally in crude. We're up by 2.8%. Lisa's been pouring over some of the details out of Libya. Lisa, WTI 76.95. Brent crude up by almost 3% as well.
Yeah. So basically, there's a rival government in Libya that's trying to kick out the central bank governor, and in response, the central bank governor in the eastern government said it will shut down all oil production and exports. This was what led to the trigger that we saw, where oil prices were higher coming into the session, but went even higher still. And it just highlights how it's not just about what's going on with Israel and Lebanon and Iran, but also in the broader region. I will just add to this that you could question whether that lift in oil prices to start the session had to do more with what was going on with Israel and Lebanon, Hezbollah, or whether it had more to do with the fact that Russia bombed Ukraine's energy sources. So there's a lot going on here under the hood that's making things complicated, not just for oil traders, but also for the central bankers to the oil world, which is Saudi Arabia.
It's very difficult to keep up with. Brent crude 81.11, WTI 76.88. Coming up this hour, we'll speak to Lizanne Saunders of Charles Schwab as stocks rally on a power pivot. Pierre Ferragu of New Street Research as investors await NVIDIA earnings on Wednesday. And Matt Lazzetti of Deutsche Bank on why the labour market will dictate the size of rate cuts. We begin with the big issue. Countdown to a cut. Stocks rallying as Fed Chair Jay Powell gives markets his clearest sign yet that September is on the table. Lizanne Saunders of Charles Schwab saying the following. Powell's speech was not a surprise, but markets rallied on cementing a start to the rate-cutting cycle. The labour market is more clearly in focus now for the Fed, with the view expressed at Jackson Hole that the Fed doesn't see the need for any further labour market weakening. Lizanne joins us for more. Lizanne, wonderful to start Mondays with you. Thanks for being with us. Any cause for concern whatsoever around this Powell pivot? Because certainly the overwhelming majority of people on this programme this morning don't have much concern.
No, I don't have much concern, but I would say, and I know you've all been talking about it throughout the course of the morning, be careful what you wish for if you're hoping for an aggressive cutting cycle on the part of the Fed. Because if you look at, and there's a long history in terms of years, but there's only 14 full Fed cycles over history. That's a pretty small sample size, and you have a really wide range of performance in terms of what the market has done in the aftermath of the initial cut. But where things are a bit clearer is if you contrast fast cutting cycles with slow cutting cycles. And the maximum drawdown is twice as large within a year following the initial cut in fast cutting cycles versus slow cutting cycles. So you actually want a Fed that is eyeing the escalator down, not the elevator down. And I think that gets lost in some of this debate.
We've heard people say, I'm sure you have as well, Liz, that the Fed puts back, Lizanne. The Fed's put back and everything's going to be okay no matter how bad the data might be. Lisa mentioned this, Lizanne. I think we need to build on it a little bit more as well. How the market would respond to bad data. We've been told good news is good news and bad news is bad news. Do you think even then, after what we heard from the chairman on Friday, bad news still really is bad news?
Well, particularly if it's really bad news. If we were to see a significant weakening from what we've already seen within the labor market, yes, you'd get that reaction function on the part of the Fed, but I'm not sure risk assets would have a sustainable rally associated with that. So I think that's the calculus at this point, is the level of weaker than expected data and what it generates in terms of expectations for the Fed.
Lizanne, everyone's going to hate this question. I'm sure you will too, but I'm going to ask it anyway. What is that trigger for a jobs market that means this is truly bad news?
That's a good question. I don't know if it's one data point, although I think if you get the next labor report next week and across the metrics that we're all focused on, not just the headlines of payrolls, but what the household survey says, what the revisions are to the prior 2 months, if you see it in terms of hours worked, long-term unemployment, the differential between temporary and permanent, I think it would have to be something where the weakness was pretty robust within the data versus just a headline being weaker. And I wanted to go back to the first part of John's question earlier. This sort of wraps a bow around this in terms of, is the Fed put still alive? I think the Fed put is still alive as it relates to economic data. There was a time there where the Fed put was applicable to really weak equity markets or turmoil in the equity markets. I think Powell's been pretty clear that their mandate, part of their dual mandate, is not keeping volatility suppressed in the equity market. So I think that Fed put is dead. I think it's still very much alive, but we need to have it in the context of economic data, not market volatility.
Although the distinction between the two is getting more and more complicated, especially as they talk about how any downside risk to the labor market could be negative at a time where a lot of people look at financial conditions as a key input. I mean, at what point are we looking at a Federal Reserve that is not going to tolerate some sort of significant sell-off simply because it could weaken that outlook for the labor market?
Well, I guess here's a scenario where I think the Fed put would not apply to markets. If we were to actually get robust data, both on the inflation side of things and not a weakening in the labor market, and it changed the calculus to the Fed maybe having to even consider not moving in September. That could cause some turmoil in the equity market. That would not be a trigger for the Fed to step in and say, ignore the better economic data, ignore the uptick again in inflation. We're going to tackle weakness in the equity market here by continuing to loosen policy. And Lisa, your point is also very good about financial conditions. It was very, very brief, but we saw a pretty big tightening in financial conditions when we had that early August turmoil. But that kind of turned on a dime and went back to slightly looser, which is another reason why our view is the Fed's going to start with 25, and their bias is to stick with that, and only with more significant weakness in the economy would they consider bumping that up to 50.
What do you think is going to be more important this week, Lizanne? Do you think it's going to be jobless claims, or do you think it's going to be NVIDIA?
Tell me what NVIDIA's report is. I think if NVIDIA is in line, it may not be a big needle mover, but I think you could see a needle mover for the market that particular day, both with an outside surprise on the upside or the downside. Claims is important, but I think the next monthly jobs report maybe exceeds the importance of claims, unless we see a really big outlier number within claims. And then, of course, we've got core PCE too. That doesn't tend to surprise significantly around expectations, because once you have CPI and PPI in the books, you can kind of map it to what PCE is going to be.
Lizanne, we'd love your thoughts as well on leadership. Small caps outperforming again today. Saw that on Friday. Saw a series of all-time highs on the equal weight on the S&P 500 last week as well. What's your take on leadership at the moment, and what are you telling clients?
So, yes, you've seen a bit under equal weight, under small caps, but I think you want to fade anything lower quality within small caps and lean into higher quality. Still a huge differential in terms of the performance within an index like the Russell 2000 between, say, non-zombie companies and zombie companies, about a 17 percentage point difference in the performance there, with maybe obviously the non-zombies outperforming. You look at profitability as a factor. That's been a dominant factor within large cap indexes, but also within small cap indexes. So I think you want to, if you're looking for opportunities down the cap spectrum, don't sacrifice the fundamentals, especially around things like profitability and avoiding those zombie companies.
Lizanne, one of the very best. Appreciate it, as always. Lizanne Saunders there of Charles Schwab, with the small caps up by 0.9% today. The S&P 500 up by about 0.1. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's your Hara Hackers.
Hi, John. Kamala Harris' campaign raised $82 million during the Democratic convention. That pushes the campaign's haul to $540 million since Joe Biden announced he was stepping aside. A third of those who contributed were first-time donors, and 2/3 were women. Meanwhile, the top 10 super PACs supporting Trump have collectively raised approximately $305 million since the beginning of the year. Meanwhile, dual hurricanes are threatening Hawaii. It's a rare combination that could bring heavy rain and winds to the islands twice within 1 week. Hurricane Hone passed south of the Big Island on Sunday with sustained winds of 80 miles per hour. Another named storm, which is currently a major hurricane, could impact the islands in the coming days. And new Boeing CEO Kelly Ortberg faces questions over the future of its Starliner program after NASA turned to SpaceX to return astronauts stuck on the International Space Station. NASA announced the decision after weeks of testing and debate over Boeing's faulty spacecraft. It's the latest blow for Boeing in a year that's also included a cabin blowout, federal investigations, and an executive shakeup. That's your Bloomberg Brief. John?
Brutal times, brutal stuff over at Birmingham. Yahara, thank you. More from Yahara in about 30 minutes. Up next on the programme, we'll get you some morning calls, plus we'll catch up with Pierre Farragut of New Street Research as investors look ahead to NVIDIA earnings on Wednesday. From New York, this is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The opening bout 1 hour and 14 minutes away. Equity futures up by 0.15%. In the bond market, yields going nowhere. Your 10-year 380.65. Let's get you some morning calls. First up, Telsey Advisory Group cutting its price target on Lululemon to 360 from 470. The analyst Dana Telsey expecting a weaker second half due to increased competition, a challenging backdrop in China, and Lisa's given up shopping there.
Well,
their stock is up by 0.5%.
There are competitors, Vuori, for example.
I have become an unofficial Vuori brand ambassador.
It's fantastic. I have to be honest.
The best.
Okay, but this is going to turn bad, so let's move on.
Is it already?
I think it already
It's
has.
going to turn bad. Okay. Stock is up by 0.5%. We're moving on, apparently. Lisa's rules. Next up, Baird raising its price target on Foot Locker to 35, maintaining a neutral rating. The firm anticipating inline results when the retailer reports on Wednesday, but seeing several potential headwinds for profit upside. Their stock is up by 2.75%. And finally, your third call, Stifel, lowering its price target on Nike to 79, keeping a hold rating. The analyst saying Nike's back-to-school athletic footwear survey suggests competitive pressures in the U.S. market. The stock leads down 0.9.
Yeah, they've missed out. I'm sorry. This has been sort of the issue for both Nike and Adidas, where they're talking about how do they compete with the Hokas of the world or OCs of the world. I mean, they basically have lost some of the clout in the running world, in the athletic world, and so now they're trying to renew their cool at a time where there are all these upstart companies that are targeting the Air Jordans that really were popular, say, 5 years ago.
Had we talked about Vuori before? Was that the first time?
I think that was the first time.
Amazing. On the same page about that. Yeah. I was there Saturday morning.
Really?
Yeah, fantastic.
It's really high quality. I like the style. It's sort of
really
like
soft
low-stated.
Yeah,
it's very nice.
Totally on board. We'll continue this. When this wraps up, we'll continue this. Good stuff, Bramo.
Yeah.
Nice. All right, turn it to tech. All eyes on NVIDIA. Earnings on Wednesday. The last of the Magnificent Seven to report. Shares this month up more than 10%. Analyst Pierre Ferragu of New Street Research recently raising its price target on the AI giant to 148, expecting reassuring signals in the earnings results. Their stock is up by about 0.5% this morning after a decent rally on Friday. Pierre Ferragu of New Street joins us now for more. Pierre, just go through sort of base case expectations for you and the team coming on Wednesday.
Yeah, so on Wednesday, you know, investors got shook off a bit by all this noise about the Blackwell family of chips, the next generation chips being delayed. And so that created some kind of like nervousness around the stock. And to us, the reality is that NVIDIA is still in the same situation. All buyers are increasing their capex. The supply chain is increasing capacity very, very steadily. So it's very reasonable to expect NVIDIA to do better than what they guided 3 months ago, and to guide for the next 3 months in the same vein, like above current expectations. So we think the numbers are going to do fine. And then the second thing is all investors are going to ask on the conference call about the Blackwell delays. What does that mean? Does that mean like growth is going to slow down? And our view here is kind of like counterintuitive. The reality is that when you launch a new chip like Blackwell, it's consuming more of your supply capacity. You need more HBM chips per GPU. You need more like CoWoS packaging capacity per GPU. And so if the new chip is ramping slower, it's actually easing up capacity constraints. And so what we think is that the management is going to explain on Wednesday that while Blackwell might be delayed by 6 to 8 or maybe 12 weeks, Hopper, the previous generation of chips, is actually going to continue to sell very well, because we're still in a world in which many people, many teams want to have as many GPUs ASAP. And so if the next generation is not ready yet, they'll keep buying a lot, as much as they can, of the previous generation.
Pierre, I wanted to ask you a few questions that I don't think will be answered on the call on Wednesday, and it's what's happening further downstream. I had this conversation last week with Bloomberg's Mandeep Singh, and he built things out for us a little bit as well, and I'd love your thoughts too. When you hear from their biggest customers, they are still bulled up on investing in this cycle big time, without a doubt. You just get the sense, though, that investors just on around the edges might be losing patience with the story, that they actually want to start to see that investment turn into real bottom line profit growth. Pierre, do you identify any kinds of investor restlessness further downstream with the end use case for AI?
Yeah, I think you're spot on. That's becoming like the key questions, the key concern for investors. And that's the right way to look at it. So we're doing our best tracking down, you know, who's doing what with AI. And so far, we think signals are extremely positive. Like you look at what Facebook can produce in terms of numbers of efficiency gains driven by the migration of their recommendation engines on larger systems. When you hear like companies like Walmart telling about how much efficiency gains they gained from AI, I think we're still in a phase where people are getting excited about it, and we are in that kind of like almost like contradictory situation where today, if you don't invest in AI, whether you are like a Walmart using it or like an Amazon or a Google deploying the infrastructure, you're taking big risks because AI is very, very powerful and evolving very, very, very fast. So I think we're fairly safe in terms of the news flow coming in. But there is another reality, which is that we are getting into 2025 into a world that is going to spend like $150 billion on AI chips. And the key question is going to become, again, well, what's next? You know, can NVIDIA's business grow significantly from there again? But we're not going to have any visibility on that for at least, you know, the next 6 to 9 months.
Pierre, do we have any visibility into what the policy backdrop is going to be and how that might affect NVIDIA? And I say this as there's a front page story in the Wall Street Journal today talking about how Chinese AI developers are basically working with internet brokers to access NVIDIA chips overseas so that they can work on them without violating some of the bans on importing some NVIDIA chips into mainland China. I mean, how much do you sort of look at this and see this as something that could potentially be a liability for the company that they talk about going forward?
Yeah, I think it's always an overhang. The government can do whatever they want. The invisible hand is still pushing GPUs towards China, and Chinese users are actually still accessing their GPUs. The government has to work on a thin line. It's very, very challenging. They want to keep the leadership in AI in the US, and for that they don't want to weaken NVIDIA or any players, and they want to make sure they don't let China catch up in terms of AI capabilities. I think this balancing act is going to continue. We've seen it over the last 2-3 years, and you have back and forth, and you might have like a tightening of regulation around NVIDIA. But now, at the end of the day, it's a smaller moving part. Remember, we are still in a world in which people want way more GPUs and way more chips than what is being produced. So if you have a ruling limiting again access for China to leading GPUs, China will instantly buy, previous generation GPUs, less powerful GPUs, and then the more powerful GPUs, and maybe we had in our models that we are going to China next year, they're going to go to Western clients, and I would call that a second order moving part. It might create a lot of headlines, but I don't think it's enough to disrupt the trajectory as long as we are supply constrained globally.
Pierre, thank you, sir, for your clarity as always. Pierre Farragut there of New Street Research, looking ahead to numbers from NVIDIA Wednesday afternoon. The most important quote ahead of these results came from Sundar Pichai of Alphabet, who basically said the biggest risk here is underinvesting. That's one of their biggest customers, saying they want to overinvest and not underinvest because the biggest risk is underinvesting. When investors start to lose patience with that, that's when this story changes sometime sooner. At least that's one reason for it to change. Don't see that just yet.
That's the reason why there's so much optimism. You're not hearing that at all from companies, and the companies are pushing back and say, hey, investors, you can be skeptical of our expenditures, but we're going to keep on doing it. So far, this is a company that has not missed estimates in the past 7 quarters, and I would argue in those 7 quarters have blown away expectations and the upside revisions to estimates over the remainder of the year. That's what a lot of people are expecting this week as well.
As the bar has got higher and higher, it's just sort of been beat and raised, beat and raised, beat and raised.
So options are seeing a 9.4% move post-earnings. We're talking about a company that has a massive valuation. We're talking about huge swings in just market capitalization value.
Slightly higher in the pre-market this morning. Equity futures up by 0.1%. Up next on the programme, Matt Lazzetti of Deutsche Bank, and we'll speak to Michael Collins of PGIM Fixed Income. A view on the economy, a view on the market, just around the corner.
morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Stocks on the S&P 60 minutes out from the opening bell, firmer here by 0.1%. We've noted the outperformance of the small caps over the last week. It continues up by 0.8% on a Russell. Switch up the board, turn the page and get to the bond market. Big move lower last week at the front end of the curve. At the back end of the week, following remarks from Fed Chair Jay Powell, yields aggressively lower. Down not even a half a basis point this morning, 391. Not too far away from where we've been pretty anchored so far over the last few weeks, Lisa, which is just in and around 4%.
Okay, to be very honest, very little drama this morning. These are very minor moves. At the same time, I do think it's interesting that the slight pop in oil prices is actually coming with longer-term yields popping just a touch on the margins. And again, this sort of, what kind of are we not watching out there? Is there a risk to longer-term yields and longer-term inflation expectations, the more biased the Fed is to just cutting rates in response to any potential economic weakness?
So turn to crude and look at WTI and Brent. When you see a move like this morning, your first question you've got, is this a demand-side story or a supply-side story? This move today, Lisa, we can all agree, is a supply-side story.
Given the fact that Libya is, particularly the eastern government, is curtailing or completely stopping their production and exports of crude, this is in response to a domestic squabble in terms of kicking out the central bank governor in the eastern government region. It just highlights how vulnerable this whole sector is to a whole host of potentially volatile areas. It's not just that, it's also Russia attacking Ukraine's energy supplies. So there's a lot going on that goes beyond just what's going on with Israel and Hezbollah and Iran.
Crude is up by 2.7%. Under surveillance this morning, some top stories for you. Apple sets its sights on a September launch date. Sources telling Bloomberg the tech giant is planning to unveil its latest iPhones, watches and AirPods on September 10th, a critical launch after several quarters of sluggish sales as it looks to stay competitive on AI. That's the big date, September 10th.
It's a big day on many reasons. I mean, it's also going to be the debate, evidently, supposedly, on ABC between the two presidential candidates.
Possibly,
depending on whether that actually gets done. Look, the big question for them is, can they come up with some sort of super cycle in terms of replacing iPhones if there is some introduction of artificial intelligence in a concrete way? The true metric of that, I have been told, is a one John Farrow index about whether a Jonathan Farrow will actually go to the Apple store and turn his in because he sees the other one as preferable.
I went to the store and turned some old ones in.
Ooh.
Spent a long time at the Genius Bar and they were incredibly helpful. Since we're doing reviews this morning, they were incredibly helpful.
All right. Joe, thank you for being nice to him.
Very, very easy to take stuff back. Super easy. And they explained to me how they recycle the phones. They put it in this machine. It just goes and just like that. Just like that. Just like that.
But does this make you actually want to get a new phone?
I'm considering. We'll see. We'll see what the new one looks like.
This is bullish on the super cycle.
We'll see what the new one looks like.
Okay.
You know, will that AI stuff really change my life and help me multitask in a much more efficient way? Can I spend less time on the phone? I'll upgrade the phone, spend less time on it. Does that make sense?
Do you think that you're not going to be suspicious of what mechanically is going on to read your mind?
I'm already super suspicious of
but
it.
you're still okay with it?
I've never used Siri. Ever.
See, this is what I'm saying. Right, but you're still going to use AI because ultimately you've got to get with it or else it's going to leave you behind.
Potentially. We're getting deep here. That's how I feel, yeah. Okay. I feel like I'm being left behind, Bramo, by technology. That's how I feel.
All right, we'll analyze that more.
That's how I feel. I feel like I'm being left behind by technology every day, and I resent it. I do resent it.
Okay, we can talk more about that later.
Let's turn to another story. White House National Security Advisor Jake Sullivan is heading to China from Tuesday through Thursday as the administration pushes to keep dialogue open. China is expected to bring up tariffs, export controls, and issues related to Taiwan as part of potential discussions. China's potentially got another problem. Who's the next president of the United States? What does November bring?
It doesn't matter. I mean, we've been talking about how it's U.S. Tariffs, but we've got reporting this morning, and Justin Trudeau is expected to give a press conference later this morning to talk about how Canada is planning to match what the U.S. is doing, hitting China with tariffs on electric vehicles and steel. This is a global type of effort. So how much does this sort of gain steam in a way that it is the same regardless of who gets elected president?
How much daylight is there between the two candidates? I think it's the rest of the world that needs to worry with regards to tariffs. It just feels like it's going to be a bargaining chip for Donald Trump, for the future president, potentially, of this country.
But this is exactly the point. How much of some of the policies he's putting out there is simply a bargaining chip versus actually being something that he plans to implement? And that is actually another debate. But this goes to the question of how much policy are we ever going to get ahead of an election? Or how much is it basically just, dog whistles to try to get people a sense of what they may or may not do to use as a bargaining chip later on that won't actually ever get passed into policy?
It's a bit of everything right now. And just to sort of go back to what Lisa was alluding to last time around, September 10th is meant to be the date also for the debate, but now there's a question mark about whether that debate is going to take place on ABC, or whether Donald Trump's going to turn up or not.
He raised questions about it, saying that the reporters involved were biased and he didn't
You should watch that exchange and judge for yourself, okay? The power pivot in focus after the Fed chair and Jackson Hole and his remarks. Matt Lazzetti of Deutsche Bank saying this: the White House, or rather Powell's Jackson Hole speech, emphasized greater confidence on the path for inflation. He spent more time outlining risks of further unwanted deterioration in the labor market. Upcoming labor market and growth data will more likely determine the initial size and pace of policy easing. Matt joins us around the table. Matt, good morning to you.
Good morning.
September 6th. This question was always going to come your way, so forgive us for asking it directly with you sitting across us. How bad does that number need to be to make this 50? What are we talking here? 100, 125? What is it?
Yeah, so I had been of the view that it didn't really need to be all that bad for the Fed to go 50 basis points in September. Now, our base case is they go by 25 basis points, and that's because we expect that payrolls will bounce back, call it about 150,000 jobs, and that the unemployment rate could round down to 4.2%. But the expectation was that you needed to see a rebound in the data in order to allow the Fed to go 25 basis points, not 50. I think coming out of Friday, it kind of confirms that idea. That Powell's, the two lines that I would look at was them not wanting any more further weakening in the labor market data was important, and that they're willing to kind of step in and make sure that they ensure the soft landing at this point in time. So, if you were to put kind of numbers on it, I think if the unemployment rate ticks higher, that certainly increases the prospects of a 50 basis point move. If payrolls are below 100,000, similarly.
Were you surprised by the extent of the pivot? I'll just go through my expectations, and I think a lot of people shared this view. 2022, single mandate central bank focused on inflation. 2 years later, we were looking for balance. Mohamed El-Erian noted in the Financial Times, and I happen to agree with him, it feels like they're a single mandate central bank again. They're just focused on the different side of the mandate. Is that a fair characterization of the pivot?
So I don't know that they're completely on the labor market side, but very clearly, if you look over the past year, 2 years, it has been entirely focused on the inflation side. And I think importantly, they were seeking slower growth and a weaker labor market to help them get inflation down. It's very clear that that's no longer the case. So inflation data do matter, but I think in terms of the size of the moves, the timing of those moves, the labor market data is going to be most important.
What did you make of the fact that Jay Powell did not use the word gradual, methodical, any of the other sort of tea leaves that other Fed officials have used to try to indicate that they're not going to move quickly?
Yeah. I think this is one where context is really important. So when we wrote our preview note the week before, we didn't expect them to use language around gradual or methodical or patient or any of those language. We expect him to keep open the optionality for 25 versus 50, which is exactly what he did. However, we got the context over the previous days there where we had Harker and Collins and Bostic all using similar language. I think that built up a market expectation that he could also use that language. He didn't. So context, I think, matters there a lot. Really what he did is allowed the market to price some premium of 50 basis points, allows the Fed to be data dependent here, increased their optionality, and didn't want to lock them into a set 25 basis point move.
But just going back to John's point, this is exactly what's fueling beliefs that this is a single mandate Fed. Because essentially he's basically saying, the floor is the limit. We can cut as aggressively as we need to, even though we're not necessarily seeing weakness. We might see weakening, but not weakness. Do you think that there is a point at which Adam Posen's argument could come back into the fore where we could actually be looking at a reinflationary kind of environment where they have to focus more on that part of the mandate?
Look, I think the burden's on the inflation data right now. And what we've seen over the inflation data over the past several months is a lot of progress across all the key components that they would look at. There was an uptick in shelter inflation in the last print, but they have confidence that that's coming down. At the same time, you're right. You're not seeing outright weakness in the labor market data. But when you look at the broad swath of data, the quits rate is lower than it was in 2019. The hiring rate is incredibly low, as low as it was since 2014. The vacancy rate relative to the unemployment rate is back to where it was in 2019. The unemployment rate has risen 0.9%. We haven't seen layoffs pick up, but the question for the Fed is they're sitting at 5.3% on the Fed funds rate, well above what any view of neutral might be. Does it just make sense to start that process of cutting rates and to take out some insurance, I think, against the downside risk? I think that makes a lot of sense in this context.
Let's talk about estimates. The SEP, the Summary of Economic Projections, comes out September 18th as well. Had this conversation with Betsy Ju, the former Fed governor, a little bit earlier on. What kind of revisions are you expecting to those projections on September 18th? Just for instance, we've got unemployment year-end. They've got it at 4%, year-end 24, 4.2, 2025, 4.1, 26. What are those numbers going to look like?
I think clearly the unemployment rate has to rise for this year. I think likely inflation comes down a bit, a tenth or two, and those two things together motivate what is likely to be at least 3 rate cuts in that dot plot for this year. I think if the Fed is debating between 25 and 50 and they side towards 25 because the data is resilient, one area where they can give a little bit of a dovish signal to the market is dots further out, so 2025, 2026. Because what they had built into that June SEP was this very gradual process of cutting rates, almost this quarterly process of cutting rates. I think that notion is probably behind us. We are now of the view, or I think the market is the view, and the Fed is probably of the view, that they're going in 25 basis points each meeting, and it's really a debate between 25 and 50, really probably until they get closer to neutral.
Matt, this was great. Do we get dissent?
I think if they go by 25 basis points, no. I think if they were to move by larger, there's potential for dissent by somebody like Governor Bowman.
If you had to put Chairman Powell somewhere between 25 and 50, is he leaning towards 50, a little bit more than 25?
I don't think so. I think there was an important message from the central, kind of the center of the committee last week, which is they would like to and prefer to be able to go at this more kind of meticulous pace, but they're going to be responding to the data. Okay. Now, for the market, it's created this difficulty because it's given them a sense that they're very data point dependent.
Are they not?
Well, the sense is certainly there. And the problem is that last data point is right before the blackout period. And it creates this potential for the market to move in a direction that the Fed might not want, heading into the blackout period, possibly opening up the potential for needed signals during that period.
Matt Lazzelli, Deutsche Bank. Hasn't stopped them before. To continue the conversation, Michael Collins of PG and Fixed Income joins us now for more. Mike, did the Federal Reserve Chair just declare victory over inflation?
Yes, and I think it's the right thing to do. I mean, you're seeing, the actual data really punch lower, Jonathan. I mean, CPI, both headline and core, ex-housing, are printing below 2% now, year over year. And we all know housing has been a problem in the data. Housing is a lagging indicator. Home prices now in more and more metropolitan areas are falling. In certain parts of Florida, some of the higher end parts, home prices are down, Jonathan, 25% from a crazy peak. But you're definitely seeing that the housing part come down, and that's going to keep inflation closer to 2%. And the Fed has clearly, I haven't seen them pivot. A lot of people criticize the Fed of being too stalwart and sticking to their guns and being too slow to pivot. Man, they've pivoted a lot this cycle, right? From 0 to 5.5 when inflation was high. And they just did a major pivot from focusing on inflation to rightly focusing on weakness in the labor market.
There was a phrase we used to hear a lot of pre-pandemic. The Federal Reserve used to talk about extending the cycle, attempting to extend the cycle. I hear the same kind of thing all over again, Mike. As a market participant, do you operate with the underlying assumption that they can achieve that? They can extend the cycle?
They have the ammunition to do it, right? The question is do they have the guts to do it, right? What they should do is cut rates, start now, and I think they get that finally, right? And Powell is certainly on board to that. I mean, if they could snap their fingers right now, Jonathan, and not worry about financial conditions taking off in their face, they would probably put the funds rate at 3.5 today. I think that's probably the right level today, given the growth and inflation outlook. But that's not how they operate, right? They're going to move really slowly, methodically, I'm kind of discounting the probability of 50 basis point cuts at this point. I think they're going to move 25s until the markets force them or the data force them to move more aggressively. But the funds rate is arguably 200 basis points too high right now, but they're going to be really slow, and you know, there's a chance that they have to play catch up at some point. That's normally how it works. But they have a lot of room to engineer the soft landing, right? So I think there's a really good chance they pull it off. And the economy, the private sector is not over-levered, right? They're not over their skis like they have been in most long expansions. It's been kind of a short, you know, post-COVID expansion here. And the companies and consumers and the financial sector and the housing sector are not levered, right? And that's really the most important point when we look at the economy from the bottom up, right? There's a real good possibility that we don't have a hard landing here.
And Michael, this seems like consensus, and that's what I really want to get to with you. Are we overpricing the chance of a soft landing, even if it is the most likely scenario? How much is that already a point that the market is leveraged to, given the fact that high-yield spreads are some of the lowest that we've seen during the cycle, and that, frankly, all-in junk bond yields are the lowest that they've been in 2 years?
Yeah, it's funny, Lisa. The rates markets feel like they're pricing in maybe too high of a probability of a recession, right? I mean, right now, in 2 years from today, the markets are pricing in almost exactly a 3% funds rate. That's a lot. That's a lot of cuts. And I think what the markets are pricing in there in the rate structure is not that they get to 3, but that there's a good chance they get to 3.5 or 4. And there's this increasing probability that they have to cut into the 2s, right? So that's, I think, the probability distribution priced in. The credit markets, to your point, and arguably the equity markets, are kind of whistling past the graveyard here and really assuming that either you have a soft landing, or if you do have a recession, Lisa, it's a mild one, and it's not an existential credit crisis where default rates spike, where you have a huge increase in bankruptcies. And frankly, that's really our view, that this could be one of those cycles, you know, similar to maybe 2000, where financial assets reprice, but the actual real economy doesn't take a big hit. I mean, you had a lot of defaults then, but a lot of it was fraud related and other things. But I could definitely see a very benign default cycle over the next few years, even as the economy slows.
So, Michael, could you sort of put this through to understand what you're doing with this? Kind of where you're leaning in, the balance of risks. What do you think is underpriced that you're going into, and what do you think is overpriced that on the margins you're trimming?
Yeah, I mean, it's actually pretty straightforward. It's almost frighteningly so. Like right now, I think there are just too many cuts priced in the near term, given the high probability of the softish landing, benign economic scenario. So we're fading the rally in rates here marginally, kind of underweight, you know, that 5-year part of the curve, trying to, you know, bet that the Fed isn't going to cut as aggressively as what's priced in right now. So that's one way to do it. And then on the credit side, you play defense, right? You hunker down, wait for opportunities like we saw 2 weeks ago or 3 weeks ago, where vol spiked. Spreads actually blew out pretty aggressively. That high yield spread you just quoted widened almost 100 basis points, right? Those are really big moves really quickly. It was difficult to execute on, but you want the dry powder, Lisa, to be able to capitalize on those bouts of volatility and on credit problems, even if they're just idiosyncratic problems. So be defensive in credit, but be aggressively willing to add risk when you have those opportunities, because remember, you have this Fed backstop that is potentially gigantic to support you if things do unravel more quickly.
Were you disappointed that there wasn't a clearer statement on the neutral rate or a clearer discussion even among the Fed officials?
No, they're as confused as we are on the neutral rate, Lisa. It's a moving target. It's really hard. Like, where is the funds rate supposed to be in a perfect world? They still have like 2 3/4 as their long-term dot. That is probably going to continue inching upward towards 3. Like I said, the market's pricing in 3 in just 2 years from now. You know, the real funds rate, you know, if inflation is at 2.5, should the real funds rate be 1 or 1/2? And maybe that puts the nominal rate at 3 or 3.5. Yeah, that sounds reasonable to me. I don't think the R-star is supposed to be 2, right? Which is where we are now. We're closer to 3 right now. You know, somewhere between 0 and 1 would be my guess. So, you know, high 2s, low 3s on the long-term funds rate seems reasonable. I think the Fed is kind of coalescing around that view as well.
Mike, just before you go, what happened to the maturity wall in credit? We used to hear things like survive until 2025. I saw this quote from our team here at Bloomberg. It came from 24 Asset Management. It's less of a wall now. It might be a fence. Michael, just how low is it?
I was a high yield strategist 30 years ago, Jonathan, and we've always worried about the maturity wall. You never hit the wall, right? Companies, they change their behavior when conditions change, and people forget that, right? It's not a static environment. As rates have gone up, companies have been really actively and very aggressive in managing their balance sheets, paying down debt as it comes due, terming out their debt. And now, with these rates structure lower, spreads really tight, as Lisa mentioned, now suddenly companies are looking at all-in yields 100, maybe even 200 basis points lower than they were at their peak, a year or so ago. And they're like, heck, that's not terrible in a world where my revenues are growing in, mid, even high single digits, and my margins are hanging in there. Yeah, let's refinance our debt at these middle single digit coupons, for investment grade, and 7-handle coupons, if that. For high yield, it's not terrible. So they manage the wall, and you never actually hit it. What causes defaults is people not being able to make a payment, an interest payment, as much as a principal payment. So don't, I think the maturity wall is overstated.
Mike, thank you, sir. Michael Collins there of PGIM. Appreciate the update. We've taken a lot of bricks out of that wall over the last few months.
So Bloomberg News put the story out over the weekend that the junk bond maturity wall records a historic collapse, that the pace of refinancing this year has been the fastest going back at least a decade. So it highlights how much people are trying to term this out. It always is this way. People worry about the maturity wall. I remember back in 2013, everyone was saying, it's it, this is it, it's over. Yeah. And then,
but this has happened without the Federal Reserve cutting interest rates.
Isn't
that the surprise here? How tight are we?
Well, that's a great question, and this also goes to the point of, have markets done the work for the Federal Reserve? And this is the reason why maybe they have the ability to go slowly, because the markets have gotten out front.
Already there. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hi, John. Tensions escalating in the Middle East as Israel and Hezbollah exchanged fire over the weekend. More than 100 Israeli warplanes hit missile launchers in southern Lebanon Sunday. Hezbollah responded with a rocket and drone attack that killed one Israeli soldier with fallen debris. Israeli officials claim the strike prevented a massive assault planned by the Iran-backed militant group, and Israel has declared a 48-hour state of emergency. Meanwhile, Canada is imposing new tariffs on China, targeting electric vehicles, aluminum, and steel. That's according to people familiar with the matter. Canada will impose a 100% levy on EVs and 25% on steel and aluminum. Prime Minister Justin Trudeau is expected to unveil the policy in Nova Scotia, where he's gathered with his cabinet for a series of meetings about the economy and foreign relations. And the first ever Rolex Rainbow Daytona watch is getting ready to go up for auction in Geneva. Phillips will auction the Rolex from the 1990s on November 8th. It's expected to sell for at least $3.5 million. The watch is believed to be the first ever to feature the now famous rainbow gem set pattern produced by the Swiss watchmaker, according to Phillips. The watch has been in a private collection for almost 2 decades. That's your Bloomberg Brief. John?
Yahara, thank you. Does absolutely nothing for me. What? Nothing at all.
Rolex? Rainbow-colored Rolex?
Just that flashy stuff, just nothing.
Where can people wear it? I mean, where do you go with this?
Not around here.
That's probably true.
See what's happening now?
Yeah, I do. But also, sort of, who are you trying to impress? I don't know. I'm speaking I'm preaching to the choir here.
Yeah, we're on the same page. Up next on the program, we'll set you up for the week ahead. We'll get you some earnings, some data, and the calendar just around the corner.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about, how do I take everything that I know and I've learned and actually do the opposite? And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
You match sentiment.
All right, so here's my question. What's going to be the most important thing for this week, and potentially in a week when a lot of people are on vacation? How much did Peter Scheer set us up absolutely the correct way?
What did he say?
Where he was talking about algos, and he's talking about how there's, you know, outsized volatility, and how much is it, you know, again, going back to when the people are away, the algos will play. Is that going to be something where we start to see some really big moves in this week?
If you tell me what the earnings are for NVIDIA or what the data is for Thursday, I'll tell you what's more important data point, right?
Exactly. I mean, this is exactly the point, though. And you'll tell us, listen, if NVIDIA moves by more than 9%, akin to what the market is currently expecting, that's almost $300 billion of market cap that will be added or subtracted in one day. That is not insignificant.
Do you remember the record? 329 billion. That was the end of July. We've seen these swings before on this name. It's remarkable.
I was looking at a period. It's a 4-week period that sort of spans July and August. NVIDIA lost more than a quarter of its value. It has gained almost all of it back. It is about 5% away from its all-time high. These are massive swings that we could be dealing with in just a short period of time.
Long week ahead. Welcome back, Bramo.
Thank you.
It's good to see you.
Good to see you, too.
Empty seat here. Is she coming back?
I don't know.
Taking a week off?
Yeah. Evidently, she took Libby Cantrell's advice seriously.
Good for her. Come back after Labor Day weekend. Up tomorrow. This is your lineup. Chris Morangi of Gabelli Funds, Sebastian Page of T. Rowe Price, Matt Stokey of Northwestern Mutual, and Phil Camporelli of JP Morgan. From New York City, this is Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry. And
crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Well, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Coming up, counting down to a Fed cut. Powell's pivot last week has investors debating the size of the first reduction and future easing. Investors also anticipating NVIDIA's earnings, which may tell whether artificial intelligence exuberance is warranted. Plus, more retail results roll in. Nordstrom, Gap, and others report as inflation-weary consumers continue to seek bargains and value. Let's take a look at where markets are trading. Of course, 30 minutes until the cash market opens. You can see a little bit higher when it comes to the S&P 500, fresh off its second consecutive week of gains. Of course, about 0.2% higher right now. Can't say the same for big tech. Of course, the NASDAQ 100 currently down about 0.1% pre-market. We think ahead to NVIDIA on Wednesday, though. A lot could change this week. And the bond market relatively quiet right now. 10-year yields down almost 2 basis points, Shanali, but close to their lows of the year.
Close to their lows, and the S&P close to record highs. We'll talk more about that this hour. Some stocks to watch, though, pre-market. Closely watching NVIDIA ahead of earnings on Wednesday, which will undoubtedly impact the overall market. The stakes are high for investors, with Wall Street estimating 140% growth in data center revenue. We're also keeping an eye on Chinese e-commerce giant PDD shares tumbling. After reporting weaker than expected sales, it's a sign that Temu's growth is falling short of investors' heightened expectations. ADRs pre-market in the U.S. down more than 19%. Also watching SolarEdge, climbing about 7% pre-market. It announced the CEO has stepped down. The renewable energy manufacturer is searching now for new leadership, Katie.
And we'll keep an eye on that. And of course, the busy week that we have ahead of us, we kick it off with an exclusive interview with San Francisco Fed Head Mary Daly this afternoon with our own Mike McKee. And then tomorrow, we get consumer confidence numbers and kick off a full week of retail earnings, kicking off with Nordstrom. And then Wednesday, it's the main event, I would say. NVIDIA reporting after the bell, and like Shanali said, the stakes are high, to put it mildly. Thursday, we get initial jobless claims and second quarter GDP, and on Friday, personal income and spending data. I mean, you look ahead, this is unofficially the last week of summer. I think it's safe to call it that, but when it comes to the narrative of this market, still consequential.
Very consequential, and you look at the S&P 500, less than 10 points away from its closing record high. A lot of risk still with that NVIDIA earnings picture set later this week, and recalibration, right, after Jackson Hole. You saw a lift in the market, but perhaps not as big of a lift as some investors expected.
Yeah, we've certainly come a long way, very fast, in both directions. So let's kick it over now to Liz Young. She is SoFi's head of investment strategy. Liz Young-Thomas joining us now. And Liz, when you think about sort of the ingredients to a sustainable rally through the end of the year, of course, we got the pivot from the Fed, Jerome Powell on Friday, pretty clear that September is going to be a cut. But then you think about the other part of the equation, and that is the fundamental picture on the corporate side, and that is NVIDIA coming up on Wednesday. What do you think that we're going to hear from the chip maker when it comes to overall sentiment of this market?
Well, I think it's undoubtable that NVIDIA matters a ton to the sentiment of the broader market, and it's clearly this week's big story. So we've had a lot of data that we've had to digest until this week, and then obviously after this, we're looking at the next jobs report as being the bigger thing that tells us whether or not the Fed is going to cut 25 basis points or 50 basis points at that September meeting. But I do think that the fundamentals have mattered a decent amount, particularly through this earnings season, as we've gotten cooling economic data. So when we look at the group of the Mag 7 stocks in whole, they've done okay, but there continues to be this tone shift on investors' part about all of the investment that's been made into AI and looking for the profit-making machines that are going to happen on the other side, and it feels like there's a little bit of impatience there. However, NVIDIA has been the beneficiary of much of that spending. So all eyes and ears will be on those earnings on Wednesday, and I have to tell you, I don't remember a time when the market was this sensitive to one particular stock. It makes sense to be sensitive to a lot of the economic data that's coming in, especially as we approach a Fed cutting cycle, but this one stock is obviously holding a lot of power right now.
Yeah, it's really interesting. There was some data crunching, I believe from Citi, that you take a look at what's priced in for the S&P 500 the day after. It's roughly a 1% move, which is roughly equivalent to a Fed meeting. So to your point, really speaking to how important this stock has become. But I think it's important what you said about, you think about all the troubles that plagued some of the other Mag 7 names when they reported in July, that investor frustration for a return on investment. But I mean, you make the very important point that that's all to NVIDIA's benefit. You think about how much money they're spending, it's kind of all going to NVIDIA, it feels like.
Right. Well, I think when you look at AI as a theme, you have to really expect it to be a theme, not necessarily something that we've already seen the end of and we understand what all of the use cases are. So themes typically play out in markets over 2 to 5 years, maybe even 5 to 10 years. This takes a decent amount of time, and we've had a lot of comparisons to the internet, and perhaps it will shake out to be the same thing. And in those early years of the internet, we really had no idea how things were going to evolve over time, and different companies that were going to come into the fray, and different ways even that consumers and businesses were going to benefit from what the internet really was. So I would still expect AI to continue to evolve. We're very early in this theme, particularly in that chip maker space and in all the companies that are going to be able to benefit for it. So there's still a lot to come, and I think investors have started to realize that as we got really enthusiastic about AI early on, perhaps we pulled forward too much of that enthusiasm into the first couple years of results.
Another sector I want to talk about here, Liz, knowing that we still have more earnings this week, we have Nordstrom, Kohl's, Abercrombie, Gap, the divergence you've seen in the consumer sector. How do you think about how to invest across that sector?
Yeah, so in the midst of we have NVIDIA earnings coming, but in the midst of it, we've got Retail-a-Palooza. So we've got a lot of information coming about the consumer. We've already heard from some of those big box retailers, and their results have been positive, a theme that seems to continue as long as retailers are providing value to customers. Obviously, customers still a little bit squeezed by inflation. That has not gone in the opposite direction. So when we're listening for results from other other retailers, what you really want to listen for, first of all, is you separate them into discretionary spending and what would be considered more necessary spending. So from those discretionary spending companies, you want to hear that consumers are still looking for ways to continue their spending. The consumer has driven this economy completely through COVID, after COVID, and there is really no such thing as a durable economic expansion in the U.S. without the consumer. So that discretionary spending piece is very important. I do expect, though, that retail spending will continue to slow down a little bit, or at least cool a little bit, as customers continue to look for ways to save money as inflation stays elevated since 2021.
That idea of elevated inflation and worries under the surface here that those inflation risks could stay elevated. You still have a market here, Liz, with more than 100 basis points of rate cuts priced in to futures markets. So if the market does not see those cuts materialize, what does that mean for equities? Can you really have a significant risk on posturing here when we're so uncertain about the trajectory of rate cuts?
Well, I think the key word in your question is uncertain. If we somehow backed off of this rate cut expectation, or the Fed started to send a message that they were going to go more slowly with the cutting cycle than the market currently expects, I think what we would need is more certainty about strong economic data to prove that that's going to be okay. Basically, the market would need to understand that the economy is strong enough to absorb higher rates for even longer because the data is strong. So we would need to still see very, very solid labor market numbers. We would still need to see very solid consumer spending numbers. We would continue to need strong fundamentals, strong corporate earnings results in the third quarter. And we would also need to see manufacturing pick back up again. So there would have to be a plethora of good news to support the market. As we saw on Friday, the market wants rate cuts, and it reacts positively to the idea that cuts are coming, or at least that the cutting cycle is beginning. So if we backed off of that, I think we would need something commensurately positive on the other side.
Well, Liz, how much confidence do you have right now in the strength of the labor market? Because that absolutely has been the narrative of the past few years. Of course, you think about the Fed's hiking cycle, you've seen that resilient labor market, but then we go to last week, of course, those payroll revision numbers that we got, 818,000 weaker than maybe we thought here. I mean, what is your current thinking on the labor market and how that wraps into Fed policy?
Well, it's clear that the labor market has cooled, but we needed it to cool. It was way out of balance a couple years ago, way too tight, way too many open jobs, not enough people to fill them, and that had its own host of problems. So the fact that the labor market has cooled has put it in better balance on the business side of things, which I think is good, and then all of the fears over a wage price spiral have abated, which is also good, especially for the inflation story. Right now, the way that I see the labor market is that we are at almost a perfect level. We would like, and I think the Fed would like too, for it to stay about where it is and not get too much weaker. The trouble with that is that, in my opinion, moves in rates, so rate cuts as we're expecting, do not really support the labor market directly. So if the labor market continues to slow, or if it starts to cool more quickly than the Fed expects or than the market expects, rate cuts are probably not going to be able to save it. So right now, we are okay as long as the consumer stays strong and as long as businesses continue to manage their operating margins well, which so far it appears that they have been able to manage well. Then I think the labor market can stay stable, it can stay durable. The thing that we have to get used to, though, is that we've been so accustomed to an unemployment rate below 4% that people have that in their minds as normal, and that's actually very abnormally low. So an unemployment rate of 4.3% is not high. Even an unemployment rate of 4.5% would not be considered high by historical standards. So as that unemployment rate moves up, if it continues to tick upward, the market's going to have to digest that and get used to a level that's a little bit higher than what we were thinking was normal for so long.
Well, would you be okay, Liz, if the unemployment rate were to inch closer to 5% then, particularly by the end of next year, given the lagged effects? And should it weaken more drastically than some investors expect here, what are the ripple effects? Where are the first places you begin to pull back?
Well, I think the labor market holds the key for the rest of the year. I think it's some of the most important data that we're going to get because it's going to be the indicator for what the Fed is going to do. And I also think that it is something that's going to affect market sentiment very much. So we saw that with the last jobs report. We've obviously got another one coming up on September 6th. If the labor market weakens faster than people expect, I do think it's going to cause volatility in equity markets. And volatility, if we are extended, if we stay at the levels where we are right now, where we've got a market driven again by a lot of mega cap stocks, a lot of the things that have the biggest gains and have driven the market up are the first things to get sold. So that volatility, if fear goes through a market, which is what we saw on August 5th, it really doesn't discriminate against any sectors. So if you see selling that happens, it usually happens across the board. So I think it's important that we watch labor market indicators and not just the unemployment rate. We have to watch continuing jobless claims. We have to watch initial jobless claims. We have to watch the employment cost index. We have to watch job openings. There's a lot of labor data out there to track, and not all of it is sending consistent signals.
Liz, we thank you so much. Of course, that is Liz Young-Thomas, SoFi's head of investment strategy on a very busy Monday on another very busy week in markets. Let's get a check on those markets because there is some movement under the surface. You have the S&P 500, the futures trading 0.2% higher. We are really about 6 to 8 basis points, or 6 to 8 points rather, from that record closing high. 2-year yields now at 388, a 2 basis point, almost 3 basis point move lower. Very interesting here. Crude is actually the story of the morning, trading at above an 81 handle, almost 3% higher in the wake of Libya's eastern government saying it'll shut down oil production and exports, as well as heightened geopolitical tensions, Katie, in the Middle East.
All right, now coming up, we're going to get another read on the consumer this.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Lots happening on Wall Street.
I couldn't have been more wrong.
It's going to stay volatile for a while longer.
It's a bifurcated market.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Year over year, you could start to see some cracks.
It might be overhyped short term, but it's underhyped long term.
From businesses most influential and instrumental.
A lot of the doom and gloom has been somewhat overblown.
If you're not living near the edge, you're taking up too much space.
Bloomberg Wall Street Week, only on Bloomberg TV and radio. Context changes everything.
And I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
And now to high interest, a look at what's making headlines around the world. Iran-backed Hezbollah militants and the Israeli military traded massive aerial attacks on Sunday as violence along the Israeli-Lebanese border reached new heights. Both sides, however, indicated that they did not want a full-blown war in Lebanon. In the meantime, the U.S. has stepped up its naval and air defense presence in the region as a warning to Iran and its allies not to increase hostilities. And former President Donald Trump is suggesting he might skip a September 10th ABC News debate with Vice President Kamala Harris after agreeing to participate earlier this month. The debate is the only one that both campaigns have officially committed to with the network, and it's not the first time Trump has suggested that he would back out of that ABC News debate. Earlier this month, Trump said that he would no longer appear at that September 10th debate that was previously scheduled with President Joe Biden. And Boeing space woes are getting worse. NASA decided it was too risky to use the company's glitch-prone capsule to bring back 2 astronauts back to Earth and will instead send its rival SpaceX to rescue them early next year. The Starliner episode is another black eye for Boeing, whose reputation has been badly damaged, Katie, in recent years.
All right, and we mentioned it before, but this will be a busy week of retail earnings because we're looking ahead to reports from Nordstrom, Kohl's, Abercrombie & Fitch, Gap, just among others. Joining us now with more, I'm pleased to say we have Mary Ross Gilbert. She is Senior Retail Analyst for Bloomberg Intelligence, joining us now. And let's start with Nordstrom. Of course, they hit the tape tomorrow. And you take a look at the Bloomberg Intelligence preview. It seems like you're maybe looking for something a little bit better than consensus when it comes to Nordstrom.
Yes, Katie, that's exactly right. So what that's going to be led by
is really on the value side, and that's the rack business. That's the discount sort of off-price business for Nordstrom versus the full-line stores. So we think we're going to see those sales potentially be 200, maybe more basis points higher on a comp sales basis for that chain. And then for Nordstrom, that could be sort of in line in terms of sales, the comp sales coming in, close to 1% or something like that. But what we're seeing at Nordstrom in our channel checks in the full line stores is they're constantly bringing in some new brands. So we noticed that in the handbags they had Totem, and they're also moving things around. So they have Free People in a more prominent position, and that's that's a very successful brand for them, as an example.
You think about this movement you're seeing from customers looking for that value, also interested in what's going to go on over at Kohl's and Gap, given that dynamic.
Yes, and a valid point. Kohl's, of course, is in a turnaround mode. And so the expectations there, I would say, are fairly low. The analysts are looking for a decline in comp sales. But we think they could come in line, maybe slightly ahead. So we'll see when they report. And we're certainly seeing in their stores, they've got now a vast dress collection, something that they didn't have before. And of course, dresses do very well. But they're also adding some new brands for the teen consumers. That includes like Quicksilver, Roxy, Limited 2. So those are coming in, and that's a good time right now for back to school. And then they're expanding home decor. And now they've got Babies R Us little boutiques in the stores. And that's rolling out as we speak. But the big driver for them is Sephora. In the first quarter, we saw just the Sephora beauty sales, that beauty business up 20% on a comp basis in the first quarter. So that's going to be a big focus because they've rolled out more stores in the second quarter, over 100.
Yeah, that's certainly a powerful brand to have in your portfolio. You think, too, about Sephora going viral on TikTok over and over. That has to help as well. But I want to take this conversation to Abercrombie & Fitch, because that has just been a stock market darling over the past year or so. Over the past year, that stock is up almost 240%. It has just been incredible to watch. Now, a lot of that is pinned on this turnaround that Abercrombie has been able to execute, appealing more to older millennials, maybe some older Gen Z as well. How much steam is left in that rally, though? Because that's been the narrative for a while when it comes to Abercrombie.
Yeah, that's exactly right, Katie. So with Abercrombie & Fitch, they're still doing it. I mean, if you look at the transaction data, and we're looking early in the third quarter, in the second quarter, of course, we expect them to beat. Comp sales by analysts are expected to be up 15%, but they could be well ahead of that. And we're still seeing this trends very strong early in the third quarter. So their best dressed guest does really well, and of course their wedding edit. So we think we're going to continue to see good numbers coming out of Abercrombie. And that sort of brings us to another exciting name that you just mentioned earlier, and that's Gap. Gap has a new viral campaign starring Troye Sivan. So he's got like 15 million followers. That compares to the Gap brand at 3 million.
Wow.
Old Navy, which is over half the business, has shown strong performance. So we think they're going to beat estimates, and it's going to be driven by Old Navy and then to a lesser extent Gap, which is their second largest brand. So we're very excited about what's happening there. And of course, with Old Navy, they have their new Genius Denim campaign that's going on. And that you can find that on Instagram, YouTube, and TikTok for all of their brands. They're really doing a great job going across social media and really creating millions of impressions with their very exciting campaigns.
Yeah, certainly. And you see a lot of other apparel makers and retail names in general trying to replicate that social media success. Mary Ross Gilbert, great to get your thoughts ahead of this busy week. That, of course, is Mary Ross Gilbert of Bloomberg Intelligence. And make sure to tune in on Wednesday when we'll be speaking with Fran Horowitz. She is the CEO of Abercrombie & Fitch. But coming up first, up in smoke. Cigarettes smoking plummets to an all-time low. Details next in today's Social Climbers. This is Bloomberg.
Count countdown to the opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, team, saddle up. I want Q1 full index reports by desk by noon.
Are you getting any of this?
Yep, Otter's got the meeting notes. I'll ask it for action items in the channel. And Maria already asked for a budget reminder. Smart.
Got it?
Got it, boss.
Otter, you got this. It's odd how, in an instant, things can transform. Slipping out of balance into free fall. I'm glad I found stability amidst it all. Gold. Standing the test of time.
When you're the leader in disaster cleanup and restoration, how do you make like it never even happened happen? Fire it up, Randy! By being prepared for anything! Whatever comes your way, there's a pro for that.
Serve Pro, like it never even happened.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher-level analysis, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more.
All right, it's time now for Social Climbers. The company's making waves this morning, and first up, Uber getting hit with a record $324 million fine by a Dutch privacy watchdog, which said that Uber was collecting information of drivers from Europe, including taxi licenses, location data, and in some cases, criminal and medical data, and then retaining them on servers in the U.S. Next up, Altria. It's the U.S. maker of Marlboro, making the social rounds today after a new Gallup poll shows that cigarette smoking among Americans has plummeted to an all-time low. Only 11%.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that, have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Moments away from the start of trading on this Monday. This is Bloomberg Open Interest. I'm Katie Greifeld, and a lot of people are on vacation, but the market isn't. Of course, we had that big rally on Friday after we heard Jerome Powell not only open the door to a 25 basis point cut, but increasing speculation, maybe we'll get 50 in September. Of course, stay tuned on that one. But you can see that rally really carrying through that momentum today as the bells ring, both on the NASDAQ and on the NYSE, of course, as we kick off the last trading week of August. Let's get a check on these major averages right now. Of course, the S&P 500, we saw that momentum continue up about 0.1% as, of course, the bells ring. You can see the NASDAQ 100 down a little bit, not exactly carrying through, but we do have NVIDIA coming up on Wednesday to change that narrative there. And then the small caps outperforming today. The Russell 2000 up 0.7%. That rotation trade kicking back in. We'll see if we can hold on to that. But one stock to keep an eye on at the open, that is PDD, suffering after sales miss estimates last quarters as shoppers get more cautious about spending. The e-commerce giant based in China owns Temu. That, of course, is a marketplace that's encountering growing regulatory scrutiny after its meteoric rise. And you can see shares currently down 22%, Shanali.
It's interesting. I'm keeping an eye also on SolarEdge. This renewable energy company maker here, equipment maker, is higher after the company announced that CEO Zvi Lando has stepped down. Shares of the company are down almost 70% this year as of Friday's close, but now you have a stock up only about 4%. Early in the trade today, it was up more before market. Also, of course, having to watch NVIDIA. This is the big stock of the week. They're reporting after the bell on Wednesday. Shares are expected to move at least 9% in either direction. And you can see today we're holding steady to get us started. We're going to take a closer look at what's expected out of NVIDIA with Bloomberg's Abigail Doolittle.
This certainly is the big event of the week, Shanali. It's really been the big event, I would say, for the last month or so, even overshadowing Fed Chair Jay Powell last Friday. Take a look at NVIDIA on the year, up 162% at the highs, up more than 180%, really outpacing the chip sector overall, which is up about 25%. So the question is, can they put up another blowout quarter where they beat estimates and guide higher in a big, big way? If we break down some of the segments, we're going to see very solid growth for data center of 142% on a year-over-year basis, gaming a little bit less. So from a broader standpoint, something that I would point out is the fact that relative to sales, we're looking at 113% growth, which sounds tremendous, but relative to the quarter before, 262%, so a big drop on a sequential basis. It's even more so on the bottom line, where they're expected to put up 156% growth, but that is relative to the previous quarter of almost 600% growth. It's going to be interesting to see whether or not investors are factoring that in, because no matter how much they beat, that growth is just simply not going to be as much. Well, I guess they could put in what would truly be a massive, massive beat. And then finally, relative to the earnings move that we might see, Shanali talking about the possibility of a 9% move up or down. Yes, this is a stock that makes big, big moves after its earnings, mainly to the upside because of these blowouts. You can see February of last year, a big beat. And then May of 2023, that was where they really set off the AI craze, where they beat in a massive way. The guide, the quarter after, not so much. So that's the quarter we're actually really looking at. And then take a look at November, down and then up and away. It's going to be very, very interesting interesting to see, Katie, how investors react to this report for sure Wednesday after the bell, and then, of course, Thursday.
Big time. Abigail Doolittle, really appreciate that preview. And let's keep this conversation going now because we have the perfect guest to do so. Amy Wu Silverman, she is RBC's head of derivatives strategy, joining us on the desk. It's great to see you in person.
Great to see you.
So let's go straight to that derivatives market that you know so well, because a 9 to 10% post-earnings move sounds pretty huge, but as you point out, that's actually in line with the historical average for NVIDIA post-earnings. What is the takeaway from that, just given how many eyeballs are on this report?
Yeah, obviously in our market, we're always looking for events, always looking for catalysts. NVIDIA, of course, given the breadth and the weight in most indices, is a big deal. But if you actually look at this earnings setup, the best I can say for it is meh in terms of where the sentiment is. Usually it really leans quite bullish, and then you see that cycled again post-earnings. You're not seeing that this time, but you're also not seeing extremely bearish sentiment. And again, that plus or minus 10% implied move, Katie, is actually pretty in line with the realized moves we get in the last 8 quarters.
And if you take a look at what the pricing is for the broader S&P 500, I brought this up at the top of the show, but I believe for the day after on Thursday, the S&P 500 is priced for about a 1% move either way, which is what you usually see for Fed meetings. So this one report from this one company, investors are looking at this with the same importance as a Fed meeting. Is it that serious?
You know, I think if you look to history, yes. Yeah, we kind of saw this change in about May of 2023, the first time we got that blowout earnings when AI really became its own narrative. And since then, that skew in the options market has been so important in generating further momentum. And we think about just the market in terms of factors. What is outperforming? It's momentum. So if momentum begets momentum, and NVIDIA is driving that momentum, then yes, I think that could certainly change the direction. That's not what is being priced in right now, but that certainly could have the impact.
I want to talk a little more about what's under the surface here, even beyond NVIDIA. You have over the weekend Citigroup Stuart Kaiser saying that the stubbornly high VVIX, despite 2 weeks lacking clear macro catalysts, suggests that positioning risk is lingering in markets. Risk takers also seem cautious about adding too much exposure with that September 6th payrolls looming as a large digital risk event. When you look at the derivatives market, where does positioning stand, and how drastic could moves be from here?
Yeah, you know, one thing I like to do is just think about the analogy of you're on the airplane, you stabilized, but you didn't forget the turbulence, your seatbelt's still on, right? And I think that's sort of what Stu is saying there, which is, no, VIX is not at that headline 65. It's not in that sharp rise anymore. We've kind of stabilized on headline numbers, but all those secondary factors that we watch so closely in derivatives are really continuing to show nervousness. And the reason is institutional memory is quite short. So when realized volatility is quite low, that's all you remember. But when you've had recent spikes, it's hard for investors to forget that. And so maybe they're not betting on large moves, but they're certainly starting to protect for it. And that is a major difference because for the first 6 months of this year, no one wanted to hear the word hedge. They didn't want to hear the Cassandra story, and that has changed.
What's interesting about this idea of hedging is how much more expensive is it getting to hedge at this point? Are we going to face a point in this year where that risk becomes so prominent that it becomes too expensive to put on some of those hedges at this point?
You know, it's interesting you say that. I think this is one of those really counterintuitive things about the options market, which is when hedging tends to be low, no one wants to do it. And also the reality is it doesn't pay off. It actually takes that pickup in expensiveness to get people thinking. And of course, why are we in this situation? We have situations in the Middle East. We have an upcoming election. We have the potential dragging of the NVIDIA story, right? There are all these things, all these cross currents that are coming to bear. And it's shown that the market from a positioning perspective can react quite negatively to that. So look, yes, hedges can be expensive, but we have still continued to see them pay out in those situations.
You know, I was chatting with an investor over the weekend who made the point that when it comes to hedging, okay, when the market goes up, then I regret it because I could have had more money in the market. And then when I actually do need that hedge, it's kind of like, you know, it went down a little bit for like a day or two, but now I'm right back up again. For those investors who had been hedging, when we were talking about when volatility hedges were still so cheap, did those actually pay off? I mean, you think about that sort of human psychology feedback loop of, you know, not hedging and then, you know, not needing to hedge. Where are we there?
So I'd say the answer to this is nuanced in the sense that this means you have to be more careful and thoughtful about your hedges. So maybe you don't sit on outright put options. Maybe you're owning a put spread. Maybe you're owning a put spread collar, right? So you're thinking about ways to carry your hedge better. But I will say this has caused quite a great deal of existential dread in our universe, because it is true. When you look back to the drawdowns of 2022, right? Market drew down 20%. Hedges didn't pay off, even though we had a drawdown because of the path. So you have to be really good on timing. But look, when you do have these spikes, they do tend to work. It just has to be very thoughtful how you structure them, which is why our roles exist.
Amy, stick with us. We're going to talk much more about what you're seeing in the market alongside clients. But for now, coming up, we're going to talk about why Telsey Advisory is souring on Lululemon. Big week for the consumer story. We're going to tell you exactly what's going on next in Top Calls. This is Bloomberg.
The opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Most people call a leaf filter when their gutters are clogged and they notice one of the many issues that can bring. Well, sometimes it's the smell of mildew when water has seeped into the interior walls, or maybe they've spotted mold in the attic. But most often, it's the more obvious signs of damage, like rotten soffit, fascia, or water pooling near their foundation. You can get ahead of costly damage by protecting your home's gutters today. We're in your neighborhood and ready to help.
Schedule your free gutter inspection today. Call 833-LEAF-FILTER or visit leaffilter.com.
Best thing I've ever done. That's what Freddie told me.
To change my life, it was the best thing I've ever done. And really? Yes, without a doubt. I don't have any anxiety about money anymore.
Great people. Different people, that's for sure. And all of them had different reasons for getting a reverse mortgage. But you know what? They all felt the same about two things. They all loved their home, and they all wanted to stay in that home.
If you're 62 or older and own your home, you could access your equity to improve your lifestyle. A reverse mortgage loan eliminates your monthly mortgage payments and puts tax-free cash in your pocket. Call 1-800-791-1493.
Why don't you call and find out what a reverse mortgage can mean for you?
Call Finance of America and get your free info kit. Call 1-800-791-1493. 1-800-791-1493.
For decades, venture capital has arguably been one of the highest performing investments. But for most investors, it was out of reach until now. With the Fundrise Innovation Fund, you can invest in some of the world's top tech companies, including those leading the AI revolution, before they go public. Now it's your turn to get in early and start building a portfolio of industry leaders, disruptors, and pioneers with the Fundrise Innovation Fund. The future is now open for investment.
I earned my degree online at Southern New Hampshire University.
After I graduated, I started a new job.
I was finally able to realize my purpose and passion in life.
Pursuing my degree gave me so many opportunities to grow. Don't just think about yourself. Think about the lives that you can really change.
SNHU laid the groundwork.
I am doing what I've always wanted to do.
If I was back at the beginning, I would choose SNHU all over again.
Let your feet take you wherever your spirit wants to go. The redesigned Hurricane helps you navigate any surface so it truly stands alone. Move forward with confidence at hurricane.com.
This is Bloomberg Open Interest. I'm Abigail Doolittle in the principal room. Coming up, an interview with George Hampton, the CEO of Curex. That's at 10:30 a.m. Eastern. This is Bloomberg.
This is Bloomberg Open Interest. We're going to get a quick check here on the market. We have stocks on a tear higher, marginally really, less than 0.2% higher on the S&P 500, but tech stocks not feeling the same kind of love. The NASDAQ 100 down 0.2%. Small caps getting more of a bid with expectations of rate cuts around the corner. You have the Russell 2000 index up about 0.5%, Katie.
All right, it's time now for our top calls. Some of these analyst action in focus this morning. And first up, Argus Research says that Wayfair no longer a buy. The firm cutting its rating on the online home furnishing retailer to hold, saying that the company's prospects appear muted in today's high interest rate environment. Next up, Daiwa Securities giving Target a buy rating and boosting its target on the big box retailer. Target, of course, reported earnings and sales last week that topped estimates. And finally, Telsey Advisory Group cutting its price target on Lululemon to $360 from $470. Analyst Dana Telsey also moderating her sales margin and earnings estimates for the back half of the year, Shonali.
And we're back here now with Amy Wu Silverman, RBC Head of Derivatives Strategy. And, you know, Amy, one thing we were talking about during the break here is this idea here that you have the S&P 500 that is still so close to its all-time high, but you also have gold $5 away from its record high, and Brent.
So a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Earnings. I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is a question that I think there's a lot of hand-wringing on. I think we as derivative strategists get this all the time. You know, the one analogy people keep pointing to is this going to bring forth some sort of Volmageddon, a February 2018-like crisis? To me, the short answer is no. It's very different in terms of what the product suite is and also the leverage in the market. So those two things are different. Now, does that mean that it isn't influencing the supply demand of the market? Of course not. Of course there's an impact there. I would say one thing we have not discussed, but is also important, is the rise of zero-day to expiry options. When you look at the SIBO stats on that, that's almost half of all S&P volume. That's also influencing how things are trading, how we are seeing the implied volatility and realized volatility of the market trade now.
Well, how so? Because, again, I'm a mere mortal, so I just look at the VIX. Sometimes I look at the VVIX if I'm feeling fancy. But you talk about zero DTE and that influencing the trade. Where are you seeing evidence of that?
You know, the best analogy I've come up with is, because I do agree, I think if you don't look at this every day, I don't think you can appreciate kind of the change in the market structure. But it's the idea that options used to be your GPS system, right? You're driving in the car, you used to have 1,000 feet to make that left turn, but when all the activity has gone so short tenor, you really only have 10 feet to make that left turn. So what I've been saying is your early warning system, which is what the derivatives market has been, is getting shorter and shorter in tenor. And so when you get these spikes, Monday, 3 weeks ago at this point, you know, I think people are less ready for that. And that in itself has caused some psychological nervousness.
You know, another question I have is really outside of the S&P 500, what we're seeing, because one popular trade that became quite unpopular through most of August was that Russell 2000 small cap trade. And now we had Jackson Hole. You now see a bid in that Russell 2000 today. It's just a day, but you still have it outpacing what you see this morning in the NASDAQ and the S&P 500. Why? frankly.
You know, the best anecdote I can give to you, I was marketing in Toronto maybe a few weeks ago, kind of 30 clients in a room, and I said, raise of hands, this is while, you know, Russell was doing quite well, you know, how many people think that this kind of rally is sustainable and the rotation is here? And I got like 3 sort of hand raises, and that just tells me a lot about how much buy-in there is, because ultimately when you get these flights to safeties, where do they go? They go back to the big boys, and you really see that in the underlying options positioning. You don't see that IWM call skew lifted right now, and I frankly personally don't think it continues. I think it really depends obviously on the rate story, but when you actually look at positioning and pricing, it's not there. That exuberance is nowhere close to what you see on the mega cap type trend.
That's really interesting. So, I mean, we don't have much time, but just to really distill that into a single point, that hot and cold options trade or that rotation trade, you aren't seeing the follow through in the options market.
Not at all.
Interesting. All right, Amy Wu Silverman, it's always great to catch up with you. Appreciate your time on this Monday. She, of course, is RBC's head of derivative strategy. Now, coming up, the trouble at Telegram. We've got the latest as the company questions France's detention of its CEO. This is Bloomberg.
The Principal Room, brought to you by Principal Asset Management. Specialized expertise, unique perspectives, optimized results. Principal Asset Management. Actively invested. Learn more at principalam.com.
Tamara, Izzy, and Emma. They respond to emails with phone calls. And they don't circle back. They're already there. They wear business sneakers and pad their keyboards with something that makes their clickety-clacking clickety-clackier. But no one loves logistics as much as they do. You need Tamara, Izzy, and Emma. They need a retirement plan. Work with Principal so we can help you with a retirement and benefits plan that's right for your team. Let our expertise round out yours.
You automate sales tax with Avalara. You don't have to worry about things like changing tax rates or filing returns.
Avalara.
I need Q1 full index reports on my desk by noon, complete with comprehensive data analysis. Are you getting any of this? Charles.
Yeah, Otter's got the meeting notes. I'll ask it for action items in the channel. And Maria already asked for a budget reminder. Smart.
Judge mom by morning. Got it?
Got it, boss. Otter, you got this.
Annoys you more, politics or bookkeeping? Listen, it's time to vote for yourself and make your business more successful. Get your books right, grow your business, and build your team. Call Zendu, the official bookkeeper and accountant for small business. Vote Zendu. Zendu, making taxes less taxing.
Couples choose a Sleep Number smart bed?
I need help with their snoring.
Sleep Number does that.
Thank you.
During our biggest sale of the year, save 50% on the Sleep Number limited edition smart bed and free delivery when you add any base.
There's a popular messaging app across Wall Street and in the crypto industry, and that is Telegram. That company is now questioning the grounds for France's detention of its CEO and co-founder. Paul Durov was taken into custody at a Paris airport over the weekend on suspicion of failing to take steps to prevent criminal use of the platform. Joining us now is Bloomberg Technology co-host Caroline Hyde, who has been following the story closely. It is, I think it's fair to say, a strange one at that. This is a platform that has really got into the crosshairs of multiple governments around the world because of the way that people communicate on it, particularly around riots and other things that might stir social unrest. What exactly happened here now? Why was he detained?
This is much more about the protection of children versus sexual abuse in particular. This seems to be the particular formation of France, the area, the agency that has decided that they want to be holding him for at least until Wednesday, whether or not they indeed bring charges, whether they let him go free, or whether or not he becomes a witness to an investigation that's more deeply into the protection and ultimately of children against sexual abuse. They feel, like many a government, that perhaps Telegram is not as active at protecting the sort of content that is on the social platform. Now, from the company itself, they're saying, look, it is not the responsibility of the CEO and the co-founders, as Tort has actually said on the social media platform. Look, they do have ways and means in which they take down calls to violence, for example, and they use AI along with individuals to be monitoring what's said across the platform. But more broadly, they are far more pro-free speech, and therefore a lot more has been said. And many would say in the UK, for example, Keir Starmer, the new Prime Minister, has been very outspoken against Telegram and the way in which they feel some of the actions taken and riots stirred in the UK, anti-immigration riots, were indeed fostered on Telegram.
And I also want to make a correction here. The CEO's name is indeed Pavel Durov. And, you know, if you think about the other people who are involved in the larger story around Telegram, what's really at stake here? Who are the founders and who are the investors?
The founders are brothers. And in many ways, Pavel himself has been quoted as been ultimately the Mark Zuckerberg of Russia. Back in 2006, him and his brother set up what was an incredibly popular social media platform. Now, because of their popularity and the use, they did end up becoming rather focused upon by the Russian government, shall we say, and they exited Russia, fled, in fact, overall, because they felt that the ability to have freedom of speech in Russia was curtailed. They moved. He's now basically based in Dubai, but also a citizen of France. We don't know as to whether or not he's actually shirked his citizenship of Russia more broadly. Russia has spoken out against the detention of their Russian citizen thus far, but him and his brother set up Telegram then in about 2013, 14, when they were based here in the in Dubai more broadly. And they were then focused in on, again, making sure that this was, whether or not it's end-to-end encrypted, but it's a safe space to be having conversations. Perhaps they're a little bit more unadjudicated versus other social media, but they have funded this. He's meant to be worth about $9 or $10 billion in and of himself, but they do have a crypto-related token, which in many ways has got a lot of money from certain key investors.
Right, well, let's talk about that. We only have about a minute left with you. Crypto is a crucial part of this story. Tell us a little bit more about the token and maybe some of the investors involved.
The Open Network is what it's called. It's not actually directly held by Telegram, but it was sort of set up in alliance and a partnership with Telegram. Dan Moorhead of Pantera is a big investor. They say it's their biggest ownership is in TON, the token. It's fallen hard, about $3 billion was wiped out. It's the 10th biggest crypto, and indeed Telegram's success is ultimately directly in line with its own success. It's about bringing blockchain and crypto within the social media platform. In many ways, what Elon Musk has been aiming to do is to build the ultimate large social media platform that we see over in China, like a complete use of whether it's payments and also chat and whether it's bookings more broadly. That is seemingly the way in which Telegram was seen.
All right, Caroline, great to get some time with you to speak about this. I'm sure you'll be talking about it more on Bloomberg Technology. Of course, Caroline Hyde is your co-host there, but let's get you now to the trading diary, what you need to be watching this week. Today, San Francisco Fed President Mary Daly joining Bloomberg TV in an exclusive interview. And then tomorrow, we got consumer confidence data and earnings from Nordstrom. And perhaps the main event of the week, of course, comes on Wednesday when NVIDIA finally reports earnings. Also on Wednesday, of course, we hear from Atlanta Fed President Raphael Bostic. And coming up in the next hour...
The linear business is not going anywhere. The sports business is moving is going to figure itself out between digital and linear. It's an unbelievably healthy market. They all have to be in it. They all want to be. Every single one of the players want to be in it because of the audience. We have two assets in the sports business that are year-long, don't have a season. I don't believe prices are going down. You're going to figure out the bifurcation of the rights and give things up, not give things up.
How long do you think it is before Netflix actually jumps into sports?
You know, they're in sports right now, but they just do the shoulder programming.
Yeah.
I think their point of view, and you'll ask Ted tomorrow, is we build up we don't want to be in the bidding of rights and then not have any long tail. So I'm not sure. They did bid on Formula One, but ESPN got it. So I think that was a smaller package, meaning smaller economics. So we'll see.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in every weekday at 6 a.m. London time, only on Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
It's crow's feet, fine lines, and wrinkles.
At our $14.95 price, it's the best way to try Plexiderm and see it work after your first application. Call the number on your screen.
Call 800-835-1207.
Grandpa and I used to work on this together. And when I'm gone, I want you to have it.
Doesn't count. What you need is a will, something you can sign and make official. Start your will at trustandwill.com and make it count.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience, also streaming live on YouTube as well. Alex Steele, Paul Sweeney live here. And if you're listening to us in Boston, our new home, starting September 3rd, will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. Coming up, we're going to get us figure out what's going on with oil. Hopefully, Alex can help us out here. Alex, we got Brent crude over $81 a barrel. Geopolitical risk yet again. But we got Mike McGlone. He'll help us figure out what's
I think this is a Libya thing.
The Libya thing.
No, Libya.
Oh, Libya thing. Yes,
yeah.
yes.
You can definitely break that down with Mike.
That's coming up. So we got that. We got some smart people there. Ann Berry, Threadneedle, talk to us about the market. Sean O'Hara, president of Pacer ETFs. Talk about where those ETF flows are going. The money keeps coming into ETFs. We talked to Eric Balchunas last hour. We'll talk to our good friend Sean O'Hara there. But right now, let's go to Mr. John Tucker and kick everything off.
All right, the major stock averages, they are mixed in the early going. Prospects for lower Federal Reserve rates rekindling speculation that maybe the bull market's going to start to broaden out. Jerome Powell signaling Friday the central bank is going to cut borrowing costs in September. Inflation figures this week expect to reinforce that outlook. You also had some data this morning, factory orders for business equipment dropping for the second time in 3 months in July. The Commerce Department data suggests businesses a little more guarded about spending. Energy, best performing major industry group in the S&P 500 as oil prices surge. Micron Technology weighing down tech, down close to 3%. PDD Holdings, the worst performing stock right now in the NASDAQ 100, down close to 27%. This is a Chinese e-commerce platform. They reported revenue for the second quarter that missed the average analyst estimate. The S&P 500, 5 points higher. That's up 0.1%. 5640 on the index, still shy of that mid-July record. Dow Jones Industrial Average right now is up 209 points, and the NASDAQ 100, 80 points lower, and that is down 0.4%. As we look at gold, That continues its surge above 2,500, 25.4680 an ounce right now. Brent crude, the international benchmark, that is over 3% higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul, and hi, Alex.
Hi, John Tucker. It's been a minute. Do you have a nice vacay?
Yeah, it was good. Didn't really go anywhere. Just sat at the beach.
Did you build things?
I'm still working on the year-long project, the bathroom.
Got it. The closet reversion to the bathroom?
Running on the electrical now. That's
Okay,
I'm up
all
to
right.
that phase.
More importantly, did you go to Bailey Lipschultz's house and do stuff for him?
No, Bailey,
because Paul wasn't here
had-
that Friday, but Bailey was trying to woo him to do some projects.
Smart. But
Too much to do.
You
at
can
the
do
Tucker
electric,
Dance.
though? Because I need to install some outlets in my garage for my treadmill. So
I can point you to some great YouTube videos.
The answer was yeah, but I'm not
Yeah.
coming over. All right, well, that was Bailey Lipschultz. He's joining us here. Alex Steele, John Tucker, Paul Sweeney. We are here on this Monday to take you through volume light. Yet there are some catalysts this week. You know, you got NVIDIA. Obviously, we're mentioning oil prices higher and some stocks on the move. Bailey Lipschultz, a senior equities reporter, joining us with no finance bro vest. I feel like it's important to note because you promised you'd bring another one next time you came.
I never promised that.
promised.
I do just want to say, though, I wear clothing. My wardrobe is completely dependent on the weather. So if it's in the 70s, preferably mid to low 70s, then the vest can come out.
I see, okay.
We're in like the upper 80s. So,
Okay, so it's
Wednesday
too-
will
it's a little
probably
too
be a
hot.
polo because it'll be in the 90s. Yeah.
Okay.
So I gotta commute. I don't know.
We bring you the most pressing news that you need at 10 a.m. on Bloomberg Intelligence. All right, aside from that, let's go to some stocks. What are you looking at?
JT mentioned it. PDD, the parent company of Pinduoduo and Temu, down more than 25%. Seeing this weakness also show up in the likes of Alibaba, ticker BABA, down 4.5%. This coming after the company was talking down their growth outlook for the next year, really, especially in that second half. Kind of laying out that they need to spend more. There's a lot of competition. Obviously, this is a company that had multiple Super Bowl ads, so really targeting the U.S. consumer. Does seem like they're seeing revenues and sales drying up and slowing down, not only in China, which has had its own issues as it relates to their economy, but also seems like the sales and expectations for pushing product over across the world, especially here in the U.S., may be a little bit lighter than expected. So the stock down 26%, biggest drop since October 2022. And this isn't a small company, $143 billion market cap.
Yeah, it's huge.
Yeah.
I wonder if it's a consumer thing or just a PDD Temu thing.
I think it's a bit of both. I
it's
mean,
a
what
bit of
we've
both,
been
yeah.
tracking, especially you look at Macy's underwhelming results, but you saw really strong results from the parent of TJ Maxx. So U.S. consumers being a bit more cost conscious, and it does seem like, I don't know, maybe cheaper goods if you're buying from Asia and on Alibaba, but it does seem like they're kind of getting hit from both ends of the spectrum.
Yeah, Temu though, those prices are insanely cheap. I'm a little skeptical. Like, can we trust them? Okay, what else you got?
Well, you're going to talk to Mike McGlone about oil, but I do just want to call out, as JT mentioned, best performing sector in the S&P 500, energy up 1.5%. When you're looking on a day that Exxon is the biggest driver in the S&P 500 in terms of points, and Chevron is number 4. It's a quiet day, sleepy day, but really seeing energy names moving higher. Exxon right now up 1.7%, Chevron up 1.4%, seeing kind of a general push higher. Also, ConocoPhillips up 2.6%. Again, this coming after, as Paul mentioned, oil breaking up to a newer kind of recent high. Brent crude right now above $81. This coming after kind of everything that's going on in Libya and some of those kind of reactions.
So I had to read in on this today. I know, Alice, you know about this stuff. But Libya's eastern government said it will shut down crude output and exports as a struggle with its Tripoli-based rival for control of the central bank and the nation's oil riches threatens a new round of conflict. I didn't know we kind of broke up Libya becoming the east and the west, but I'm kind of learning that.
Yeah, I had to read up on it too because it's been a while. You always hear about unrest with Libya, but this seems to be another escalation and then just barring in those exports as well. But remember, OPEC Plus has a ton of oil ready to roll.
Yep.
So they wanted an opportunity to get it back in. Well, maybe now they actually have it. What else you got?
Yeah, going to end with SolarEdge. They operate in the clean energy solar panel space. One of the worst performers in the S&P 500 right now, down almost 6%. Thing that stands out, though, we're seeing First Solar and Enphase rallying. They're the two best performers in the S&P 500. This coming after the company's CEO stepping down. They're going to look for a new CEO. Former CFO now sliding in on an interim basis. They did name a new CFO who was previously the senior vice president of finance. Interesting thing, though, the stock opened up pretty sharply, but has flipped from a 8% gain to a 6.8% decline. So volatility still in the space for a company that's down more than 80% in the last year.
All right, Billy, thank you so much. We appreciate it. Billy Lipschultz, who covers all the equity markets for Bloomberg News. Market Drivers today is brought to you by Interactive Brokers Portfolio Analyst. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free-PA. All right, we've got that Brent crude here. We've been calling it out this morning, $81.50 here, up about 3.1%, so a big move. So whenever we see big moves in commodities, we got to get Mike McGlone on the phone. He's a senior commodity strategist for Bloomberg Intelligence. Mike, again, like a lot of us, we woke up this morning and we had to read up and read in on what's happening in Libya. How much is the Libya situation responsible here for this move in global crude?
It's much more positions. Libya exports about 1 million barrels a day. Their average since 2000 was less than that. If they shut off completely, it's way offset what Alex mentioned earlier. Massive oversupply of spare capacity in OPEC. And just look at the U.S. and Canada. Our excess of liquid fuels supply over demand, which is 6 million barrels a day. That was compared to 2008, it was 10 million deficit. So it's insignificant. It's positions that matter. So I look at it as managed money net positions, futures positions, crude oil, which drives that market. We're at least a week ago, the most sold out in our database going back at least 10 years. I mean, Brent crude hardly ever gets short, and it was. So there's no room for anything but those positions to go up and from buyers to go higher. So to me, that's much more significant. What's happening is we're just kind of normalizing the positions a little bit. And the reason they're sold out is because it's a bear market. And it's just a bear market that's reading, I think, a short-term bottom.
Not to get too nerdy, but what about differentials? So Libya has a lot of light sweet crude, and there's also dark, and there's medium, and all that stuff. They have light sweet, right? So are we going to see some differential movement in terms of Libya? Like, I appreciate the fact that OPEC Plus has a lot of spare capacity, et cetera, but what do you think we're going to see there?
So, Alex, you know that area a lot better than I do. To me, it's more the macro. And the light or heavy doesn't make much difference. I mean, the one thing that's been significant is that narrowing spread between Brent and WTI. That's one thing that's new is Brent positions are way sold out and WTI positions are normalized. 10% of open interest are net longs, and those are specs. So to me, it's much more the macro, and the macro to me is overwhelming. And I'll bring in an uber big macro. It's what's happening in China. We've seen declining demand, and their bond yields are just plunging for a reason.
So if this move in crude feels a little bit more technical, when do the fundamentals reassert themselves?
Good question. I don't know. I think it's a matter of time. It follows natural gas. Natural gas got to that low price cure, a level that was first traded in 1990 in futures. Now it's around 2. That's just hovering there. Corn's there now. Front corn at 362 was first traded in 1973, 74. It's getting low. It's got to shut off that excess supply. It's coming out. Copper's probably tilting lower. I don't know how long and when it takes. I'm surprised it lasted this long. But one thing that's a bottom line, Paul, is the U.S. stock market has to go up. And that's one thing we've noticed about crude oil in the last maybe 10 years or so. When we have a normal correction in beta, crude oil goes down a lot harder. It's just much more correlated with the stock market now, particularly what's happening in China. So I look at it as a risk is to the downside. It's a matter of time. Right now we have to offset these positions, but the headlines are just overwhelmingly tilting now towards the opposite they were 2 years ago. One is recently oil's hot summer is ending, posing risks for majors in OPEC. Those are macro, which the big shifts. It's the big pendulum shift in commodities is unfavorable for crude oil, and it's on the back of the high price cure.
So when you say that the stock market has to go up, do you mean that it just will go up, or you're saying in order for oil to catch a bid, it has to go up?
Exactly. So prerequisite, I started writing about this a few years ago, is it's the inordinate burden on commodities for stocks to go up because the correlations are just going up and up and up. And at least historically, they are. So though I look at right now, if you're managing crude oil, if you have positions on crude oil, you know, okay, businesses are short. It's okay to be, I don't want to run positions are sold out. I can be long here a little bit. But you have to look over in your value risk model. You have to say, okay, as long as S&P 500 stays stable, I'll stay stable. If you get a little 10, 5% correction, crude oil will drop 20%. Now, it didn't on that last thing on October 5th because they were sold out, but now it's starting to normalize. So it's just the way markets work now.
Hey, Mike, how about gold? Earlier this morning, we were speaking with Dennis Gardman, the former editor of the Gardman Letter, and an avowed gold bull for a long period of time here. Give us your gold call here, which I'm sure is going to be very consistent with what I've known you for these many years.
I would consider Dennis a friend, and I do appreciate in the past you remember one of the few things I've been getting right, and that's gold. The problem is, and so I'm still quite bullish gold. It's the only major commodity go up, and I think the notable mention is the Bloomberg Commodity Index is down 30% since its peak in 2022, and gold's up 30% over the same frame. But it's the fundamentals that are still very bullish for gold. Deepest pockets on the planet, central banks are still buying. ETFs, which have had significant outflows, are just starting to turn upward. And then you just look at the very expensive U.S. stock market and U.S. debt to GDP. It's just fiscal spending is off the charts, and neither of the candidates are addressing that. So to me, gold is that trade that's looking for the normal recession to kick in, the yield curve, the U.S. yield curve that's disinvert at some point, just the normal cycles, unemployment going up, and gold's kind of just ahead of that trade.
You know, when I was covering gold back in the day, though, it was very much of a inflation goes up, you want to buy gold. It goes down, you want to sell gold. The central banks are buying, not because of the macro, but because they have like a percentage they need to diversify, which is not necessarily based on macro headwinds or tailwinds. Is that still true?
The questions are the same, Alex. The answers have changed. And in terms of any other currency, I think that was initially from Einstein a long time ago. But it's the in terms of any melting currency, sure, gold's a great place to park your wealth. But in terms of U.S. dollars, it's the world's shifting now, and it has a high correlation between that rising debt to GDP. I just published that this morning. And key thing I'm concerned about is the number 643. 643, here's one for you, is the number of bushels of corn equal to an ounce of gold. That's the highest ever. That's where we are right now. So gold's getting expensive, but it's showing you what happens with the store of value, global liquid assets going upward, that's gold, and elastic commodities like crude oil and corn going down because humans can create more of it with less of it every day. So gold to me is running ahead of what I see happening with the Ira Jersey says, a hard landing, lower U.S. interest rates, probably following China, and at some point a little bit of back and fill in the U.S. stock market, which used to happen in bull markets.
All right, here's the dumb question you're going to get of the day, no question. How do you value a commodity? Like on a stock, I can say price to earnings ratio. On a bond, I can say relative to treasuries. Is gold, when you say gold's expensive or gold's cheap?
So gold's different from most commodities. You use stocks to use. What are the stocks versus the use? So stocks to use for all the grains, and particularly crude oil, is very high. There's a lot of stocks, and there's more and more created. And what's that trend? Gold typically sticks with the more macroeconomic. I like to use, to me right now, it's interest rates, U.S. interest, the trend in interest rates, debt to GDP, and much more macro. How is it relative to the stock market? And here's one I like to end with. One of my most enduring charts I've looked at for decades is the S&P 500 divided by the per ounces prices of gold. Historically, gold's just very cheap. And historically, when you go to recessions, the Fed eases, unemployment goes up, that wide disparity just kind of narrows a little bit. And that's the thing. It hasn't narrowed too much because gold's catching up. And actually, it is narrowing a little bit because gold on a 1, 2, and 3 year basis is outperforming the S&P 500 total return. The risk is it just catches up more.
Bitcoin, how you feeling?
It's it's the last big trade, and it's not the next big trade. So the LBT is no longer the NBT. Bitcoin is just overdone. It's stretched. Everything that's happening in Bitcoin were things we were hoping would happen. That is, it's into the mainstream. We have a former president who's embraced it because he wants to get elected. We have the ETFs, and now everybody it's in the mainstream. The thing is also it's showing divergent weakness versus what it should versus beta. So since it made its peak in March, it's declining versus gold versus the stock market. So that's a problem. I think the fastest horse in the race is telling us by showing divergent weakness is the race might be over. So I'm somewhat more defensive on Bitcoin. The key thing I think to remember about Bitcoin, it trades 3 times the volatility of gold and the S&P 500. When the people tell you that, oh, when the stock market goes down and we have a recession, Bitcoin will outperform, I say, well, it usually doesn't work that way with very high volatility assets that are very speculative.
All right.
It goes soybeans to Bitcoin to gold to corn.
Corn to gold ratio.
Oh, okay.
Yeah, you got to
All right.
just, it's a lot. Hey, Mike, we appreciate it. Thank you so much, Mike McGlone, Bloomberg Intelligence, senior commodity strategist, joining us on all the things commodity related. But it is really interesting, just to stay on oil for just a second, how we're not pricing in geopolitical risks and then all of a sudden something happens and then we do, but it is so short-lived. And this really creates a window for OPEC Plus to start adding back production. Not right now, but if we wind up taking Libya offline for longer, then they're able to do what they wanted to do in an environment that now has a tighter supply picture.
Weren't they talking about that recently, that they were going to end some of their curbs?
Yeah, they want to.
Okay.
Can't
they just do it?
No, because then they're going to tank the price. So they just all of a sudden flooded the market with like 100 million barrels of oil a day. The price would drop a lot, and they don't target price, but they totally target price. Like they definitely need a certain level there. All right, coming up, we're going to talk to Ann Berry, founder and managing partner over at Threadneedle. We'll discuss what to do with the markets, particularly as we look ahead to NVIDIA on Wednesday.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Over 400 stocks in the S&P 500, higher right now a pretty weak volume this Monday. The overall index, little change. You had that dovish commentary from Jerome Powell, does support the narrative that inflation is trending lower and the Fed will be cutting rates at the September meeting. NVIDIA, the most active stock right now, down 1.5% as we await earnings after the close of regular trading on Wednesday. Energy, the best performing major industry sector in the S&P 500. Among some of the stocks in the energy patch, ExxonMobil, those shares up 1.9%. This as price of crude oil starts to surge, in part because of tensions in the Middle East and part of Libya shutting down oil production. And right now, as we look at Treasuries, 2-year yield 1 basis point lower, that is at 3.9%. The 10-year yield unchanged at 3.79. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Alex.
All right, thanks so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. Happy Monday. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. You can also check us out on YouTube. I say happy Monday, but guys, it's actually my Thursday right now.
It's your Thursday. Explain this.
Because after Tuesday, I'm off for a whole 3 days. So
wow, in a
happy
row.
Thursday for Alex.
Who takes off on a vacation midweek?
And me. I'm trying to save days for Christmas. You know how it goes with little kids. It's a tricky thing.
Yeah. See,
anyway,
that's when I work, so everybody else can.
It's true, which I do appreciate and I've talked to my husband about. So I say happy Monday, but I also say happy Thursday to me.
Sure.
Okay, in the market, there's been a couple interesting calls. In particular, you had Charlie McGalligot over at Nomura talking about how FOMO is back, that Jay Powell brought back the Fed put on Friday, and you're going to see a lot more funds kind of playing some catch-up after all of the selling that we've seen. In the middle of this, though, you get NVIDIA. So we wanted to get more on how to position here. Ann Barry, founder and managing partner at Threadneedle, joins us now. I appreciate that we're a little softer today, but volume's a little bit light. Do you think that the Fed put is back, that the directional upside short-term is upside?
I think it could be, Alex, but I think that's sort of subject to a lot of different things, fiscal policy being one. But I think what we're seeing right this second, actually, again, off of soft volume, this is not a great indicator as a week. There's so little going on in terms of people being on vacation. I think we're seeing a little bit of a small version of buy the rumor, sell the news. We've been waiting to get signs from the Fed for so long that a cut's going to be imminent. Now we finally got it. I think the market's looking back and saying, okay, now it's getting real. Let's dig into really checking our portfolios again and making sure that we're going for fundamentals. We're not just doing a massive interest rate trade.
And what I guess we're going to have, another example of earnings do matter. We're going to get Threadneedle. We're going to get NVIDIA after the close on Wednesday.
Yeah.
Some folks are coming back from their holiday because they feel like they got to be. Yeah, exactly. How important is one stock, and do you think, to this market these days?
Well, NVIDIA is so special, right? Because it's now become this enormous percentage of the overall tech market cap. So if you look at that sector, I think it's incredibly important as a bellwether for the sector. But there's something else going on with NVIDIA that I find fascinating. There is, yes, the earnings announcement that's coming on Wednesday. We're all waiting to see whether it does what it's done in the past, which is blow past expectations. There's something else happening, and it's happening right now, actually. NVIDIA's key engineers are at the Hot Chips conference and talking about what the latest is with their Blackwell platform, talking to the academic community, talking about to the most technologically sophisticated community about applications, about what's coming next. And I think we've got to see how that translates into how the street understands it for new product development and for demand outlook. So we've got two things happening this week. Obviously all eyes on Wednesday, but the true tech stuff's happening right now.
So to that point, if I didn't want to invest in NVIDIA, too risky or whatever, where are the other plays post-earnings that have really proven themselves here?
Well, Alex, you and I have talked a lot here on Bloomberg about where there feels to be a little bit of frothiness and how do we really get some of these companies to focus on showing us the money? Where do we really think there could be tangible, provable returns to some of the investment in technology that they're making? And so one of the big themes I've been looking at is platformization. What are these particularly software businesses that are going to their customers as a one-stop solution to solve a number of their needs? And as a result, they're going to get bigger and bigger and bigger in terms of customer share of wallet and in terms of the data they're collecting, because I think the big get bigger in the world of data and AI. So one of them, Alex, is Workday. I do think it's a winner. massive transitions still in the transition to cloud by enterprise in the areas of financial reporting software and HR software. And I think Workday's been winning. They had a real pop after their earnings, but also really seeing a path now to getting margin uplift, to seeing really high revenue retention, 95% plus, which is incredibly high. So I think Workday's one. It's a little expensive, but it's proving that it's sort of worth the money.
Workday. And Barry, so we think about NVIDIA, I think a lot of people, for better or worse, that's kind of been their default AI stock to own here. How else do you think investors should be looking for exposure to AI, which presumably is a longer-term secular story?
I do think business services where there is a provable application, Paul, is really important when it comes to looking at AI. So Workday is one of them. AI is driving some of their new products, generative AI, also on their analytics side. Another example is Trade Desk. So one of the areas that AI has been most disruptive has been in the world of media and entertainment, and particularly when it comes to ad space, selling ad space across traditional media and new forms of media. AI in terms of really calculating where eyeballs are going to get the most exposure to certain kinds of content and personalizing what individuals are viewing and trying to get the right and most effective ads in front of them. Trade Desk, digital marketplace. If you think about brands and trying to get in front of you and me, Trade Desk is the kind of place where they're saying, look, go automate putting our ads in front of eyeballs, whether it's on connected TV or whether it's on distribution lists from your favorite retailers. That's the kind of place where AI, where the analytical capabilities and the generative capabilities will start to come together.
Well, that's interesting. So it's like this is more than a second derivative. This is really looking at disrupting traditional business models using AI in a very concrete kind of way. What other areas are you seeing that? Because we all know it's coming, but the how and the profitability continues to be that question.
Yeah, so this is one sector. And I think, look, cybersecurity is another element of this, Alex. This is going to start bleeding in. The content side is going to start bleeding into places like cyber. So one area I spend a lot of time looking at is in places like deepfake detection. That's been more in the startup community. But let's talk about we're in politics. We're in election season right now, right? We're seeing all these memes going around. Is this content true? Is it real? Has it been generated by AI? And so detecting that is another area where an AI application could end up disrupting what we've previously seen in cybersecurity as well.
Cybersecurity, that's kind of where I wanted to go, because I've been telling my kids, I got to think as they look for careers, that's got to be one that's going to have a long, long tail here. Where are the opportunities in cybersecurity from your perspective?
Well, let's talk about your kids first. Is that the right place to go because cybersecurity is going to be using people? Or is that one of the places where there's the highest risk of disrupting human capital because so much is, by virtue of AI, going to be automated? So, you know, maybe they'll come back at you and try and debate this one a little bit. But cybersecurity, let's just hark back to CrowdStrike and what's happened, right, in recent weeks and months when it goes wrong. And so looking for winners where trust is really high, looking for areas that are able, you know, companies that are capturing the votes, getting bigger and bigger contracts from these enterprise customers. I think we need to look there. Palo Alto Networks has been a big one for me. We've got secular spend increasing in cyber. We've got the tech improving. It's not going anywhere. And I think it's looking, again, for places that are going to be both buying and organically investing in the cutting edge technology.
What are the cool things that you're looking at within venture that like we don't know about yet?
Well, that we don't know about yet, but we're going to announce it now, Alex.
Yeah.
But I think there's a lot going on. You know, one area that I think is really interesting, there's a lot that's going on in early stage healthcare that isn't getting quite as much of the coverage because it's not quite as glamorous as something like cybersecurity, but where it's really important. So I'll give you an example of one company I've invested in. So full disclosure, I put some capital in there, and it's a business called Teal Health. And what that business does, it's created a very small device that's going through the FDA approval process that allows women to do their cervical smears at home. So instead of having to go into the doctor's office and go through what's a really uncomfortable and invasive procedure, they can do it at home. And can you think about the applications for that, not just in the US, but let's talk about developing world economies where there isn't access to clinics for women. That kind of business is quietly, you know, they've been digging in. They've been below the radar a bit for the last 2 to 3 years, and AI has been everything. And those that have raised capital, I think, are really leaning in now to seize their moment.
Can you imagine the time that you'd save not waiting in a doctor's office? Like how much more productive we would be? Oh my goodness. Hey, Ann, we really appreciate it. Thank you so much. Ann Berry, founder, managing partner over at Threadneedle, joining us there. So that's sort of an interesting setup when it comes to tech and ventures, right? And I like the idea a couple derivatives down that you need to start looking at. But I think on a broad sense, until the hyperscalers pull back spending, how can you not buy NVIDIA?
I know. We'll have to see. It's just
this is not registered investment advice, by the way.
No, of course not. But it's just going to be, it's going to work until they just get the guidance number comes in light, and then we'll have to see a repricing. Then will that be an opportunity for people to get back in who missed it? Because the bar's been extraordinarily high for this company for 4 or 5 quarters, but they've hit it every time. And they've surpassed expectations, and that's kept the stock moving. But there will be a day when their guidance comes in a little light, and we get the sellers coming in. And the question is, will the real true believers come in and start supporting the stock? So that's why everybody's going to be watching very closely Wednesday after the close.
I mean, I won't be, but
You won't be.
But you can.
No, you will be.
I'm going to take my daughter to see her first Broadway show.
Really?
Yeah.
And we're seeing
Wicked.
Oh, perfect.
We're seeing Wicked.
Perfect.
I feel like this works.
Yep.
No one's here this week, so that works out pretty nicely. So
Yep.
you do all the heavy lifting, and
Yep.
I will contribute to the New York City Broadway economy.
Very good.
All right, you're looking at NASDAQ 100 declining now about 1.1%. S&P down by about 0.2%. Here is Michael Barr with World and National News. Michael.
Thank you very much, Alex, Paul, and John. Former President Trump is suggesting he might skip next month's debate with Vice President Kamala Harris on ABC. It comes after a Truth Social post last night. Bloomberg's Laura Davison has more from Washington.
They had agreed to debate on ABC News on September 10th. Trump has been all over the map on this. He was, for the debate, then against the debate, then for it, and now seemingly that he is not happy with ABC being the moderator and has suggested that he might pull out. We'll see. This has been, the Harris campaign has said the debate about debates is over, but I don't think it is.
Bloomberg's Laura Davison. About 100 Israeli warplanes swooped over southern Lebanon Sunday, taking out thousands of Hezbollah missile launchers in what was called a preemptive strike. Israeli officials say they had intelligence that Hezbollah was about to fire thousands of missiles at northern Israel, as well as drones at a key intelligence center just north of Tel Aviv in retaliation for the killing of its commander in July. Ukrainian President Volodymyr Zelensky condemned Russia's overnight and early morning barrage on his country as vile. Zelensky said it involved over 100 missiles of various types and about 100 drones. At least 4 people were reportedly killed. There is a West Nile warning. 36 states are reporting activity of the mosquito-borne virus. In Massachusetts, public health officials declared 8 communities, including Boston, at high risk for West Nile. Meanwhile, disease expert Dr. Anthony Fauci has been hit with the West Nile virus. Dr. Jonathan LaPook spoke over the phone with Fauci.
He developed shaking chills like he said he's never had before in his life, fever, and he was hospitalized for about a week. It took a few days for them to figure out what was going on, what was the infection, and finally they did a blood test, and it revealed that he had West Nile virus.
Dr. LaPook spoke on CBS. This is Bloomberg. markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The tech-heavy NASDAQ 100 right now, it is down 1.4%, 280 points lower in the S&P 500. Information technology, worst performing major industry group. That's all home to NVIDIA ahead of its Wednesday's earnings report. Shares of NVIDIA most active, they were down just about 3%, 3.5% to be exact. Well, the Federal Reserve preferred measure of inflation on this week's U.S. economic calendar. And today we got more evidence of some slowing. Orders placed with U.S. factories for business equipment declining in July, and the prior month's gain, that was also revised lower. Right now, the S&P 500, 17 points lower. That's down 0.3%. We're at 56.17 on the index. The NASDAQ 100, again, down 258 points. That's a decline of 1.3%. The Dow Jones Industrial Average up 218 points. That's a rise of 0.5%. We're at 41,392 on the index there. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thanks so much. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economic, and finance through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries worldwide. We also love talking about ETF flows. Eric Balchunas is probably on vacation, although I saw a license plate.
No,
he's here.
Yeah, we had him in this morning.
I saw a license plate yesterday. We were playing the license plate game coming back from Connecticut. It had ETF in it. And I was like,
really?
Is that Eric Balchunas' car?
Exactly.
I mean, maybe. It could also be Sean O'Hara's car. He's president of Pacer ETFs. And he's joining us now to talk some more about flows. Hey, Sean, does your license plate have ETF in it?
No, it does not.
Oh, it would have been so perfect.
It might have Cal Z.
Cow Z, nice. Okay, so I've been reading a lot about where the flows are going, where the funds are going. There's still record amounts of money in money market funds just sitting there in cash. Are you noticing any of that coming into ETFs, and where are the flows?
Well, thanks for having me. It's been a little bit slow here for August. I think, talking to some of my friends around the industry, I think things have slowed down. I would expect that, once we get past this weekend, things will pick back up. A lot of the flows early in the year were to the big, broad market cap weighted indexes. The big risk there, I think you guys were talking about coming up, is that there's such a high concentration of the return on the S&P 500, for example, or the NASDAQ 100, that is attributable to 5 to 7 names. And that happens from time to time, but it never really lasts. And so I think you're seeing, going to see flows away from traditional market cap as this market develops a little bit of breadth into different weighting schemes.
Sean, we had an eventful day, certainly on Friday. Fed Chairman Jay Powell out in Jackson Hole in his speech. What did you make of that speech, and what do you think it means for the markets?
Well, I think what I'm hopeful it means is that they're going to stay true to their word. I mean, they have not really deviated from what their message is. I think they're indicating now that they're going to have a cut. I would expect it to be 25 basis points, and then I would expect another cut perhaps later this year to sort of deal with a little bit of the slowdown that's occurring. Hopefully, they're able to engineer a soft landing as opposed to a crash landing. And so their strategy has been all along to be very, very tight on money until they felt like inflation was under control. I think they feel like that's the case now, and we're starting to see a little bit of a crack here and there in the labor market. And so that's their secondary concern, which is why I think they'll cut rates just a little. And I think the market, depending on what their message is, and if for example, they did 50 basis points, I think it would scare the market. So if they do 25, I think that the market will view that as a positive and continue to go up and forward from here.
So based on that then, do you see the flows into more of the let me go buy super cool tech on a dip flows, or is it let's just rotate into some defensives in case the Fed's going to have to cut 50 basis points?
Yeah, I mean, I think you've seen some of that. I mean, our big calling card is value. We think we redefined value with our Cash Cow series, and we've had a terrific year there. We have a growth strategy. We just launched Friday a NASDAQ 100 growth strategy that it takes a bit of a different take. For that side of the equation, we use free cash flow margin, which just is a measure of how much free cash flow a company generates based on the sales that they make. And so And we're optimistic that, the success we've had on the value side, we can have on the growth side with a couple of those ETFs out there right now. And then one more important point is some of the flows we've been seeing here recently have been into risk management strategies. I think people are starting to get a little bit more positioned to, if it's not a soft landing and the economy really does go into a recession, how do I position my portfolio to manage the downside?
Gold higher yet again today. Sean, how do you see that extraordinary outperformance of gold in your ETF world?
Well, I mean, the big ETFs there are taking in some money for sure. I think traditional gold investors would rather, stack it, as they say, right? Keep it in a safe or store it somewhere in a safety box. I don't really think gold as an investment is a good long-term investment. It hasn't been historically a very high returning asset, although it goes through periods when you have a lot of uncertainty where it does tend to move a bit. And so I think that what's going on with the gold trade has been driven primarily by two things. One is people see it as an inflation hedge, and then there are also people that see it as a hedge against sort of a disaster.
Right, and which brings us to Bitcoin too. What kind of flows are we noticing into the ETFs right now in the crypto space?
Yeah, well, we don't have anything in the crypto space. I'm not sure we're big believers in it.
Okay.
But I will tell you, just if you're from a market observer, there's been enormous flows into Bitcoin ETFs, which again, I don't think makes any sense. I mean, if you're going to hold Bitcoin, you don't need to hold it in a wrapper that charges you extra money on an average, daily basis, like an ETF that has a management fee. But there's been a great deal of money flowing into these ETFs. I think there was a lot of anticipation waiting for them to finally get launched. And I think eventually what you'll see in the Bitcoin space is what we've seen in the broad market space. Like when you look at the several different versions of the S&P 500 you can own, they're really all the same. And so I think eventually we're going to wind up seeing a fee war on the Bitcoin side.
Interesting.
So the ETF business, Sean, I mean, I'm just looking at some of the research from Eric Balchunas from Bloomberg Intelligence showing, the big players just dominating in terms of total assets, the vanguards of the world. Is that a healthy market structure for any market?
Well, I think generally speaking, it's not a bad thing. I think, the bulk of the ETF assets so far have been in what we would call cheap beta replication strategies, taking an existing broad index and just putting it in the ETF wrapper. So it adds some utility, if you will. You can own the whole market, for example, like the S&P 500. I think there's a very, very good use case for that in people's portfolios. And it presents a challenge for folks like us, which, we're right across the street from Vanguard, so we're fully aware of who they are. We tend to build product that we think is innovative, disruptive, or unique. And I think there's plenty of room for folks like us in this business. We always focus on an outcome in mind or a customer in mind, like, is this something that would be useful in their portfolio that's not out there? And we either try to design ETFs that are stretching for extra return or creating alpha or managing risk to the downside. And there's a place for that in people's portfolios as well. So I think the ecosystem in general has been very, very healthy. I think that, that if you're not in that $1 trillion plus category, then you're in the bottom 85% of issuers in terms of dollars. But I think as an ETF issuer, I think we're almost $47 billion today. We've grown almost 9 or 10 billion so far year to date, which puts us at like 6 or 7 in terms of year to date net flows. I think we can continue to chug along alongside of those folks and add value for financial advisors and investors going forward.
Before I let you go, we have like 30 seconds. Have you seen anything in terms of people betting on election outcomes or anything like that? Or any ETFs that you see there?
I have not seen anything yet. I think what you'll see is as we get closer, I think you'll see people trying to play that angle, if you will. I mean, there's a pretty diverse philosophy between the two candidates, if you will. One is a little more less regulation, less tax. One is more government. And so I think as we get closer to the election date and we see and people start to feel like whether or not there's going to be a clear winner, you may see some people betting with sector exposures, for example, as a way to play the election odds.
All right, we appreciate that. Thanks so much, Sean. Sean O'Hara, president of Pacer ETFs, joining us there. Bloomberg Intelligence has some nice high and low tax docile performances that they look at to see, and they don't really notice anything happening yet when it comes to the election. But I always like looking at something like that. All right, trading a little heavy, particularly on the tech side. Volume, though, pretty light. Happy Monday.
Company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with a look at your company news. You realize it was almost 2 years ago that Kroger and Albertsons announced their merger? Really? Well, they're finally getting their day in court. The grocery giants scheduled to start a federal court hearing in Portland on the Federal Trade Commission's bid to block that $24.6 billion deal. The FTC does allege the tie-up is going to lead to higher grocery prices for consumers, lower wages for their unionized workforces. Now, the grocers, as far as they're concerned, they say they need to combine to compete against the bigger rivals, Amazon and Walmart, in what would be the biggest ever U.S. grocery deal. If it happens, they pledge to spend about $1 billion to cut prices if the merger does go through. Apple rethinking its movie strategy. When Apple won a bidding war in 2021 for the rights to make the action comedy Wolves with George Clooney and Brad Pitt, it did so in part because it promised the stars it would put the movie into a large number of movie theaters. But this month, just 6 weeks before the film was set to show up in thousands of theaters, Apple announced a significant change in plans. Wolves will now be shown on a limited number of movie screens for 1 week before becoming available on the company's streaming service. Needless to say, George Clooney and Brad Pitt, they're not very happy. And finally, IKEA starting a peer-to-peer marketplace for consumers to sell secondhand crummy, secondhand furniture to each other. I'm done. I'm not saying IKEA's. I actually had an IKEA couch. IKEA Pre-Owned will be tested in Madrid and Oslo until the end of the year with the aim of rolling out the buying and selling platform globally. And that is your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. This is Bloomberg Intelligence Radio. Alex Steele here alongside Paul Sweeney and John Tucker. We are broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. We bring you all the news in business, economic, and finance, plus world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, John, former President Trump is suggesting he might skip next month's debate with Vice President Harris on ABC. This after a post on Truth Social last night. It's over mic muting. Vice President Kamala Harris's campaign says it's raised $540 million from last month when President Biden left the race to last week at the Democratic National Convention. Now the pressure is on Harris to put more details in her policy proposals. Bloomberg's Laura Davison has more from Washington.
Republicans in particular, but also some Democrats are putting pressure on her to put some more meat on the bones of her policy outline. She put about a week or two ago, put out a couple specific plans on price gouging, on home prices, and sort of a light economic plan. But she has not done a lot of the deep policy work that we've seen other Democratic candidates.
Bloomberg's Laura Davison. Both Harris and Trump will hit the campaign trail this week in several battleground states. Low-level ceasefire talks between Israel and Hamas are expected to continue in the coming days. Hamas walked away from discussions in Cairo over the weekend, saying Israel keeps changing the terms of the deal. Bloomberg's Jumana Bersetchi is following the negotiations from our Middle East headquarters in Dubai.
One of the sticking points that comes up is the presence along the Philadelphia corridor, that is the border between Egypt and Gaza. Israel wants to continue to have a presence there. Egypt and Hamas say that that is a red line.
Bloomberg's Jumana Bersetchi. German Chancellor Olaf Scholz has vowed to toughen knife laws and step up deportations of rejected asylum seekers as he visited the scene of the knife attack in which a suspected Islamic extremist from Syria is accused of killing 3 people and wounding 8 others. Scholz visited a makeshift memorial in the western city of Solingen. The suspect turned himself into police a day after Friday's attack at a festival marking the city's 650th anniversary. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right. Thank you so much, Michael Barr. So picture this, Paul. You're in your mid-30s.
Yep.
You get an email from your boss,
sure,
an investment bank, and that boss then gets fined $63,000. What would that have looked like, considering you probably work 24/7? So apparently, this is in Australia. People can now legally ignore unreasonable after-hours work calls and emails under new government legislation that came into effect today.
What's unreasonable?
Well, I don't know, but hold on. Under the laws, employers can face a fine of up to $63,000 if you get in touch for non-essential reasons. Now, I bet that Paul's boss would have gone around that by what non-essential was, but nevertheless, this feels very huge.
Well, I grew up in the investment banking world where you're on call 24/7, even on vacations, no questions asked, and that was even before we had email and stuff like that. We had pagers back in the day. They could get you. You had to leave it like a forwarding landline if you're going away on
I love
vacation.
this.
Anyway, so when I was managing my analyst at Bloomberg Intelligence, I kind of had that same ethos. And so a lot of times over the weekend, I'd read an article about, a particular company or stock, and I'd ping my analyst on Saturday morning, hey, what do you think about this? Most of the analysts would get back to me right away. Very intelligent. A lot, but many did not. And I noted that. Monday morning we came in and said, hey, man, I pinged you on Saturday about this thing. How come you didn't get back to me? And I said, this is different. You're not in global data anymore. You're in Bloomberg Intelligence. It's 24/7. Our clients are 24/7. You got to get into that mentality. So I'm not sure I would react too well.
Aren't you glad you don't?
You would definitely rack up a lot of fines.
Yes, I would rack up a lot
for the
of
company that you were working for. 100% on that. But I can definitely see like Wall Street getting in on this and being like, "What? That wasn't a reasonable request. That was essential. What do you mean?" And then like how they wind up defining it. But the point is, hey, look. you don't get paid for 24 hours a day, so you don't have to work 24 hours a day.
Oh, okay. That's one way of thinking about it.
That is one way of thinking about it.
Yep.
All right, coming up, we got a lot more on Bloomberg Intelligence. Gene Soroka will be joining us. He's Executive Director of the Port of Los Angeles. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. Last week of August. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We break down all the main news you need to know in business and finance through our lens of our Bloomberg Intelligence folks. We also go outside of that. We're going to talk to Gene Soroka in just a few minutes. He's Executive Director of the Port of Los Angeles. I'm really interested to see if he noticed anything change when you had those railway strikes over in Canada. Plus, RJ Gallo is Senior Portfolio Manager of Fixed Income at Federated Hermes. What do you do? What do you do as we walk up to the jobs number next Friday? And then finally, it's the U.S. Open time. We're going to go to our U.S. Open tennis expert, Molly Smith. Paul's off tomorrow. He'll be there all day.
I will be there. Yep, absolutely. And you know what? Carol Master and Tim Stenovic will be broadcasting Bloomberg Business Week there Thursday and Friday.
Love that for them. I'll be there on Thursday.
Oh, stop by and say hi.
Okay, this is all, it's all intersecting here. John Tucker rolling into his eyes. The team's back. This is how we go. All right, so we got a lot coming up for you in the next hour, but let's kick it off with a business flash. Here is John Tucker.
Why don't I ever get these invitations, Billy?
I don't know. Do you take days off to go to the Open?
Oh, okay. Anyway, after Friday's rally, the major stock averages, they are mixed. Last week before Labor Day, as you might expect, volume pretty weak right now. Firms look like they're more guarded about investment. That's a piece of the economic puzzle we got this morning. Orders for durable and capital goods, when you strip out transport equipment like aircraft, fell more than economists' expectations for the month of July. S&P 500 right now 11 points lower. That is down 0.2%, 56.22 on the index. The Dow Jones Industrial Average up 118 points. That is a rise of 0.3%. The Nasdaq 100 down 186 points. That's a decline of just about 0.9%. Well, Fed Chair Jerome Powell left the door open to bigger rate cuts by remarking that any pace of cuts will depend on incoming data. Traders also anticipating NVIDIA's earnings that comes out after the close on Wednesday could tell us whether artificial intelligence exuberance is warranted. Now, ahead of that, that is one of the drags right now we're seeing from technology. NVIDIA shares, they are down 1.9%. Libya's eastern government halting oil output. That's helping push crude oil higher, and gold adding to its rally above $2,500 an ounce. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
JT, thank you so much. We appreciate that. As always, Alex Steele and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio and streaming live as well on YouTube. So head over there and search Bloomberg Podcast. And if you're listening to us in Boston, our new home starting September 3rd will be 92.9 FM. That's the day after Labor Day. Bloomberg Radio moving to 92.9 FM in Boston. As John Tucker was just reporting, a mixed movement on the screen. Little red, little green, not a lot of volume out there. Not surprised here for the last week of August for sure. But let's go to Bailey Lipschultz because we're paying him to bring us some stock ideas. So you got some time here, buddy. What do you got for us?
I know, and it's all it's slow when we're talking about some of the same stocks that we talked about at the 10 o'clock hour. So starting with Temu, parent company PDD, also the parent company of Pinduoduo, down 28%, the worst performer in the NASDAQ 100. This coming after revenue for the second quarter fell short, but really the company talking down expectations for the back half of the year for the next 12 months. The company did say that their profitability is going to be hurt by plans to invest in the business, trying to fight off some of that competition. We're seeing peer Alibaba, ticker BABA, down 5%. The co-chief executive of PDD saying they are seeing many new challenges ahead in changing consumer demand, intensifying competition, and uncertainties in the global environment, Alex. So really kind of three issues that you don't want to have when you're a $114 billion company.
Right, not ideal, not ideal, and a tough tape with the liquidity.
Yeah.
Boeing, I love this story. So now SpaceX, is this true, has to rescue the astronauts?
Exactly. So this, you might have missed this. This happened on Saturday. So news comes out that Elon Musk's SpaceX will be using one of its capsules to help bring home astronauts that are stuck at the International Space Station next year. It's another drawback for Boeing. Boeing shares right now down 1.1%. We've talked at length, Paul, about their issues with their normal planes, but also seems like now the big questions for their struggling Starliner program is how they can continue to compete against the likes of SpaceX in kind of extraterrestrial travel.
You know, it's just one of these names, and you get them every once in a while, but for the last couple of years, it's just one of these names. Just when you think it's over, and you say, oh, I can go in here and buy this thing, another piece of news comes out that just knocks it even lower. And this isn't some rinky-dink company. This is Boeing. And it's just frustrating that these guys can't get their act together, but it's just one after the other.
Yeah, and on a real level, like, what is Boeing going to do with their space program? Like not just this kind of stuff, but like on a real level, how much are they going to dedicate towards R&D for it? How much are they going to keep pumping money into it? That's really my question.
Well, Bloomberg News, Julie Johnson's got a great story out. Boeing grapples with the future of space program after NASA snub, going right to that issue because you got to think about it. I mean, it's so capital intensive, and how much money do you want to put after it?
And they do have a new CEO. CEO has been on the job for like 4 weeks at this point. So that's your first thing. Not only do you have the overwhelming number of overhangs as it relates, again, to their traditional airplanes, but kind of what this could mean and how they can right the ship. That is Kelly Ortberg, the new CEO and president of the company.
All right, and before we let you go, NVIDIA's Wednesday. It's a big deal. What are some of its competitors or, I don't know, beneficiaries or hyperscalers doing ahead of this?
So we're seeing pretty sharp selling off. Again, keep in mind that volume on the S&P 500 is about 25% lower than it normally would be at this point in time. So Sleepy Monday, post-Jackson Hole Monday. Super Microcomputer, down 6%. Micron Technology, down 4%. Tesla, who's been trying to rebrand itself as an AI beneficiary, down more than 3%. Broadcom, 3%. Cadence Design Systems, which operates in chip designing, down 3%. So you're seeing a lot of these AI names. The Philadelphia Semiconductors Index, the SOX, down 2%. Risk-off kind of day where you have the Dow up 0.2%, and the NASDAQ 100 pretty sharply underperforming. NVIDIA down 2%, but 9% implied move one day for NVIDIA. That's going to be huge for the market and huge for those peers.
Wednesday afternoon, up kicking back, toes in the sand. I'm going to dial into this thing.
I know you are.
I mean, this thing is going to move the market. I actually, you know, the bar is so high for this company, but they've been so good at exceeding their expectations.
Well, that's the crazy thing. You look at their last two stock move, the last 2 quarters, up 16% back in February and up 9% in May. So huge moves for a humongous company.
All right, Bailey, we appreciate it. Thank you so much digging through the stuff we do care about on a light volume day here on this Monday. Bailey Lipschultz, senior equities reporter with Bloomberg. All right, let's go macro here. So every once in a while, I love checking in with the real economy folks, or the companies that move the things all around the world. And to me, they're such a great indicator of what's happening on the supply and demand front. For that, we're going to start with Gene Soroka, executive director of the Port of Los Angeles. Hey, Gene, just on a basic question here, you know, last week I was really struck with the 2 rail lines coming off line because of strikes. Operations have kicked back once the Canadian government came in. There are still some that are striking now. Have you noticed anything? Has anything been diverted to you guys?
Good morning, Alex, and good to have you on the radio side today. No, we haven't seen much. The cargo that's moving from the Trans-Pacific Theater in through Canada will pretty much stay in that lane, even with the short disruption we saw last week. The bigger issue for American economy is the cargo that moves north-south. So whether it be auto parts that uses the USMCA agreement to go back and forth, grain, agriculture products, steel, that's what's impacted the most. You may see a couple of shippers in Asia try to book on trans-Pacific vessels coming down to LA, but it will be very small amounts in an already over demand situation versus the capacity.
Gene, I would think seasonally right here, we'd have retailers, you know, starting to build their inventories for the holiday season. What's the traffic going through your port? What does it look like today versus some prior years?
Yeah, Paul, great to hear from you. We're up 18% year on year off of very modest comps, but we just crossed the 500,000 container unit mark last month, and it's only the fourth time in our history we've had more than 500,000 imports coming through Los Angeles. Big number for us, and it continues the trend that we've seen thus far this year. In addition, exports are now up 14 consecutive months year on year. So the volume as a whole is really great, based mainly on a strong economy and then some geopolitical issues around the world that I'm sure we'll talk about.
Yeah, so Gene, I'm curious, how much are your customers talking about the geopolitics abroad, but also here in the U.S.? Anecdotally, I keep hearing that certain companies are just holding back on investments until we get clarity on who's going to be in the White House. Are you seeing any of that?
In just about every conversation, Alex, it is an election year, and folks are looking to see and try to hedge as to what type of policies will be in place after inauguration. You've got a protracted labor negotiation on the East Coast with the Dock Workers and Employers Association that's coming up for expiry at the end of September. The Panama Canal drought issues have been in the news for well over a year and a half, and the ongoing security concerns in the Red Sea have stymied crossings at the Suez Canal for more than a year as well. All of that put together, fractionally, you see cargo coming to the west coast of the United States and specifically Los Angeles, in addition to the strength of that economy. That shows where the numbers are going.
Hey, Gene, just last week, Bloomberg News published a really in-depth big take story, and it looked at your world ports seaports around the world and how some governments are using them as really strategic tools here because they're becoming so important for global trade. Just for the U.S., do you feel like our ports are where they need to be in terms of, investments, capacity, or does the U.S., whether it's a public-private partnership, need to invest more?
We absolutely need to invest more, but beginning with the Infrastructure Investment and Jobs Act, the Inflation Reduction Act, and now applications that are in front of the Environmental Protection Agency, we've seen a focus on ports over the last 3.5 years here in the United States that we haven't seen in a generation. We'd like to have this type of federal investment budgeted annually. And I also know that the work here in California under Governor Gavin Newsom has the same bent, paying attention to these ports, investing not only in the infrastructure, but digitalization, as well as clean and green technologies. This has to continue, but I like the trajectory that we're on right now.
Going back to what you were mentioning about customers talking about election uncertainty, what's your best guess as to what happens after that? I'm trying to get a handle on, okay, now we know who wins the White House. Are we going to see a flood of money coming in, like a flood of buying, or is it just going to be incremental?
Well, Alex, take away the politics. The presumptive Republican nominee, now Republican nominee, has said he wants to put a 10% tariff on all $3 trillion worth of imports that come to the United States, 60% on those emanating from China, and potentially 60% on automobiles and other products coming out of Mexico. That would change the landscape here at the Port of Los Angeles forever, and it would create inflation. On the Democratic side, what we've seen is a continuation of this tariff regime and get tough on China policy, but in very small, targeted ways. What happens to investment after this has to revolve around international and trade policy. What are we going to do to stimulate not only the continuation of that government investment, federal and state level, but how we can give confidence to the private sector to invest behind us?
Gene, nobody has a better view of China than you guys in the Port of Los Angeles. Are the boats still coming? Are they loaded as much? Because there's real concern about the Chinese economy.
Yeah, a couple things, Paul. When we concluded calendar year 2022, 57% of our business portfolio here in Los Angeles was China cargo, imports and exports. Right now, it's about 43%, yet we're still growing. We've been nimble enough here in Los Angeles to attract the cargo in Southeast and South Asia. There are more nonstop services being put in place by the shipping lines. Speed has always been our selling point. With cargo coming from Asia and distributing throughout the country, we keep these nonstop services in place. That speed variable remains in our favor.
What's your biggest problem right now, Gene? Like, what keeps you up at night?
Well, looking across the board, making sure we keep our costs in place, and we do that with a relatively expensive landscape on how we move cargo, but more volume means our unit cost becomes much more competitive, and we're trending in that direction nicely. We've got a very complex labor landscape. Our dock workers have a contract for another 5 years, but it's the truckers, warehouses, folks in IT and manufacturing. We've got to keep trained up and moving with this economy. And then lastly, along the regulatory environment, got to make sure the clean air is a priority, but making sure that we're balanced, because every 4 containers here in Los Angeles creates a job.
Interesting. So, Gene, you mentioned some of your partners there, whether they're at the, the docks, the warehouses, the